welcome to Market Domination. I'm Julie Hyman. That is Josh Lipton, and live from our New York City headquarters, we are giving you the ultimate investing playbook to help tune out the noise and make the right moves for your money.
And here's your headline blitz, getting you up to speed 1 hour before the closing bell rings on Wall Street.
The good news is that you're probably going to have a nice beat on revenue and a nice upside to the Q1 numbers. By our estimate, about 5% on both. So, you're going to have a very solid result. The question is, the bad news is that a lot of people already are pricing that in. And then obviously you have some questions around the gross margin. I think that, you could be in a situation where the reaction to NVIDIA could bifurcate from the reaction to the broader market.
The momentum we have in mid-market, where we're gaining ground day in, day out, and getting better at executing on that strategy. And finally, a strong start to the tax season. The results we had the first half of the year are positioning us really well to continue to build on this momentum.
I think it's been taken as a comfortable exceed on Q4 by just about everybody. We'll talk about guidance in a second, but this was by far and away and by any measure pretty much the best quarter for the company ever. So 5th consecutive quarter of accelerating growth. We saw 2x or 100% growth in our gross profit year on year. Our expense line remained flat pretty much, or even negative in real terms. So we saw tremendous AI efficiencies kicking in, all of which resulted in $48 million of positive free cash flow.
We got 1 hour to go until the market close, and we're taking a look at the major averages here, which started the day higher, but that did not last, Josh. We are now seeing the Dow down by 227 points. That's about 0.5%. The S&P off about 1/5%, and the Nasdaq down almost that same amount here. And really things started to dip into the red around 2 p.m. for the Nasdaq. But really, we're waiting for the big event after the close.
That's right. NVIDIA reporting after the close. Now, you did already hear from the hyperscalers, and we see some of these names right here, some of the big tech giants. And when they told us about their CapEx plans, Julie, they were very impressive. They basically either affirmed or boosted. That should be good news for NVIDIA. But of course, you got plenty of questions in that print.
We do. You know what? Can I just say something I've just noticed here? This is market cap weighted Nasdaq 100. Usually, the stock right here is Tesla.
Yeah.
But right now it's Broadcom, because Tesla has fallen by so much at this point that it is now dropped in market cap
company,
below that of Broadcom. Just an interesting little side note here today as we consider the Magnificent Seven, whether they are still magnificent. But let's dig into NVIDIA a little bit, the stock price, before we talk about exactly what we're looking for from that release today. So today, the stock is up about 2.3%. If you look at it year to date here and what we have seen from NVIDIA, and I'm just going to write on it in just a second here. So what we have seen from NVIDIA year to date is that the stock hit its record high back on January 6th or so, and since then have sort of trended downward in a sort of zigzaggy fashion. If you go back a little further and look at the 1-year chart here, the company came out with its earnings around November 20th. I'm just going to, roughly look at it. The stock's actually down 11% since then. So that's kind of the setup that we're looking at into the numbers today.
Yeah, I'm looking for a few things that I'm very interested in. One is obviously demand for Blackwell, its new chips, but it'll be interesting, Julie, there, NVIDIA executives, that they've talked about that. They've consistently talked about how demand has outstripped supply.
Right, so let's sort of talk about the three things that we're looking for, in addition to the numbers, obviously, in addition to the forecast, the three things that we're looking for, and you're talking about this number one.
Right, in that demand, but also this constant, I think if you're an investor, you want to listen, how did that demand supply imbalance, how is that kind of evolving over time? DeepSeek, we know, you point out the stock chart, this Chinese AI model, that really sort of scrambled the AI landscape, NVIDIA included.
Yes, exactly. And NVIDIA and others in this industry have pushed back and said, this is actually, their thesis is it's actually going to create more demand, more volume of
Cheaper
chips.
tech means greater usage.
Right, but the question is, what chips are they going to be buying? Now, in this case, the theory is that NVIDIA is going to get a boost for its H20 chips. So that's something you're going to want to look for in the release and listen for in the call. H20, that's the kind of chips that analysts say are fueling DeepSeek in China. So that's
we you also mentioned export controls and what kind of impact or influence that could have on the forecast.
Right, most definitely, because we don't know, we know there's 10% increased tariffs on China on top of what was already on there. But the question now is, will all of NVIDIA's chips eventually be blocked from going into China? The company has worked around the existing export controls. What kind of flexibility does it have going forward?
All right, let's get more perspective on this. For more on what NVIDIA earnings could mean for the broader market, we want to welcome in now Jeffrey Kleintop, Charles Schwab, Chief Global Investment Strategist. Jeff, always good to see you and have you on the show. So we were just talking about NVIDIA there, Jeff, obviously reporting after the bell. Not just the report, Jeff, on that conference call, traders, investors, they're going to be hanging on every word, Jeff, of CEO Jensen Wong. I'm curious as a strategist how you're thinking about this report, Jeff. What does NVIDIA's report mean for that broader AI trade and trend? What does it mean, Jeff, for the broader market?
Yeah, well, NVIDIA's earnings offer a pulse check on the AI economy, but fortunately the stakes aren't as high for the overall market as it's been over the past 2 years. I mean, the markets were up or down based on the outcome of this. I'm talking about the entire market, just on the sentiment around just the Mag 7 and the leader of that, which is undisputably NVIDIA. But investors have moved on to other themes now. There's a broader participation in the market in other sectors and other markets around the world. That means the focus on NVIDIA is less than it's been for the last 2 years. I'm looking at the 7 European defense stocks as the new Mag 7. They've been outperforming incredibly this year. They're up 15 to 20% on top of 150% gain over the last couple of years on massive defense outlays in Europe, all driven in part by the Trump administration, but of course the war in Ukraine, etc. They're gaining about 5% so far this week. So I think the dependence on the market on NVIDIA is much less than what we've seen during past releases.
Well, and the dependent, it's not as though those 7 European defense stocks are necessarily going to set the tenor for the whole market. But I think your point is that the market is no longer monolithic in terms of themes, right? And so, where is the AI theme, I guess, in its sustainability and in how you're thinking about how folks should be investing?
Well, maybe it's broader than just hardware and just chips. Right. There's models and there's all kinds of other ways that DeepSeek showed us, but other providers of models are looking at as well that are showing, maybe there are other ways to do this. And there's a real question about there's been strong demand. The question is, where are we starting to see it really begin to show up and actually drive productivity gains? And I'm just not seeing that yet. There's been ample investment, not yet really paying off. And so there's this question about how do we make this economical in the meantime between the investment and the payoff stage? And that's hard to see at this point. So I think we might hear a number of companies talking down their investment in AI as we look out for in terms of guidance for the quarters ahead. And that could weigh a little bit on prospects for order growth.
Jeff, I'm just looking at the popular averages. All three were in the red now heading into this report. One reason here, we had the cabinet meeting with Trump. He's talking tough again on tariffs. Lots of just uncertainty there, Jeff. And I'm just curious as a strategist how you're trying to think through that dynamic.
I'm still thinking the bark is worse than the bite on tariffs. I've been fixed on that view. Nothing's changed my mind yet. Of course, Trump talked yesterday that the tariffs on Canada and Mexico were progressing on time. Today, he said, well, could be April. It'll be hard for them to meet that goal. Again, I think those Mexico and Canada tariffs, the next ones that are due to come up and be implemented, are likely to get delayed again. We may see that with the aluminum tariffs as well, set for March 12th. The U.S. doesn't make a lot of aluminum. We import most of it. It's very expensive to turn that around in the short term. I think the administration's getting an earful from companies like Ford. We know Walmart's facing some of these challenges. Imports are becoming more expensive for businesses before U.S. industry can ramp up. And I think that's going to mean a lot of these get pushed out, delayed, to the benefit of the stock market.
And Jeff, we tend to talk a lot about the potential effect of tariffs here in the U.S., but I want to talk a little bit about China as well. That's one of the areas where we do know there are tariffs that are going into effect, right? Those 10% additional tariffs on top of the existing ones. The Chinese stock market, though, has been doing pretty darn well, and the Chinese ADRs that trade here have been doing well. What's the outlook? What's your outlook for China stocks this year?
China stocks are all about the domestic economy and not about external trade. China, about 3% of China's GDP is external trade with the U.S. So Yeah, I mean, it could be doing better, but that's not really the driver of its weak momentum over the last couple of years. Things seem to be picking up on prospects for an improvement in the property sector and improving consumer confidence in China, which has been weak at depression levels for the last couple of years. March 5th is the National People's Congress meeting. That's when they lay out the GDP target and the employment targets for the year and the details on how they expect to meet them. There are high expectations for a lot of stimulus coming out of that meeting. They may deliver for the first time in a while and actually deliver that stimulus and see the economy turn around and cheap stocks can rebound. But there is risk, Julia. I mean, we're looking at a government that's repeatedly overpromised and underdelivered. So we'll be watching that closely.
Jeff, finally, let me get your thoughts on the 10-year. I'm looking here, Jeff. We're back to 4.25 here, Jeff. Is that reflecting growth worries bubbling up here, Jeff? And where do you see the 10-year headed from here?
You know, our view on the 10-year is that it's probably a little higher as we move out over the course of the year. I think inflation is going to remain fairly robust in the U.S. And unless we really see some kind of breakdown in the job market, which doesn't appear to be on our radar screen, we're expecting to see that stubborn inflation remain in place. Rate cuts, though, around the rest of the world as inflation remains fairly tame outside the U.S., but don't look for the Fed to deliver much here in 2025.
Jeff, thanks so much. Appreciate it.
Thanks for having me.
We want to check in on the crypto market now because Bitcoin prices are once again falling today. They're now below 85,000. That's the lowest since around November. And this coming as investors pulled more than $1 billion from spot Bitcoin exchange traded funds yesterday. That marks the biggest one-day outflow since those ETFs first started trading. That was last January. So definitely seeing some outflows here and seeing some action here. Let's check on Bitcoin here. So this is looking at the one-year chart. It's down 4.5% today. And here you have that sort of lowest since November. Something else I want to point out here is if you look at the pullback that we've seen in Bitcoin, it's now more than 20% from that high close to now. So looking at another bear market in Bitcoin. Now, bear markets in Bitcoin are not terribly unusual, not as unusual as they are, say, for more traditional asset classes like U.S. stocks, like the S&P 500. So we've heard a lot of different investors saying that this is a potential time to get in. They're looking at potential catalysts. Remember, the change in administration and a loosening of the regulatory environment was supposed to be a big catalyst for Bitcoin, and it was, right? We've seen Bitcoin still up quite a bit from before the election. The question is now what sustains that. Now, something we're going to be keeping an eye on is continued potential deregulation. There is a Senate hearing today that's going to be dealing with digital assets. It's actually going on right now. It's the Banking Subcommittee on Digital Assets, chaired, of course, by Cynthia Lummis, who has been a long-time Bitcoin and crypto advocate within Congress. So we'll see if that makes any difference here. But you can also see from this screen, it's not just Bitcoin. We're seeing some of the other big cryptocurrencies fall. Ethereum, of course, suffering that big hack to Bybit. That's an exchange late last week. And if you look at crypto stocks as well, here's sort of the equal weight. Some of the stocks are up. Robinhood is up today. But we're also seeing a lot of selling in other areas, the equities tied to cryptocurrencies. Josh?
All right, Julie. We are just getting started here on Market Domination. And coming up, it's the latest edition of our series, Goodbye or Goodbye. We're taking a deeper dive into two stocks to help you make the best moves for your portfolio. And starting at 4 p.m., tune in to Yahoo Finance's special coverage of NVIDIA's fourth quarter earnings report and get you the latest results from the chip giant, as well as instant analyst reaction from the report and the earnings call. We're going to be right back.
Now time for some of today's trending tickers. Amazon shares, they're ticking higher after the company announced a generative AI-powered version of Alexa. Our very own Dan Howley was at Amazon's event. He has the latest. So what is Alexa going to be able to do now?
Yeah, it's Alexa Plus. It is a new version of Alexa. It's powered by generative AI, and I think the main takeaway from this is that it's Amazon's way of finally getting its once revolutionary 10-year-old smart assistant up to snuff with what Microsoft has to offer as far as ChatGPT, OpenAI, Microsoft, and Google has to offer as far as Gemini. I'm leaving Apple out of that for the moment because Siri just still isn't really up to par, despite them having ChatGPT as an option. But this is going to be available for $19 per month. If you have a Prime membership, it's free. And you'll be able to do things like use agentic AI, which basically means you can say, okay, order me a cab or order an Uber for, Michael. He's at the airport to go to my apartment, and send Michael a text that the Uber's coming. You'll be able to do that, or do things like make a reservation at a restaurant and then put it on your calendar and then send that information to a friend. So all of these different kind of ways of interacting that we're seeing different generative AI applications use, Amazon's adding that to Alexa. And I think one of the other things, though, that kind of sets it apart from the others is there's already built-in smart home support. So you have things like during the press event, Panos Panay, Amazon's head of device and services, basically said, okay, Alexa, has anyone walked the dog recently, or named his dog? I can't recall his dog's name at this point. And sure enough, a Ring camera came up and showed the dog going out for a walk. Over the past couple of days. So it's things like that make this feel more interesting than the original Alexa, which, I mean, how many times did you stand in front of it and scream, Alexa, I said play this song? And now it's going to be better. I think one of the things to keep in mind, though, is that this was all a strategy to get people to buy more through Prime. And it didn't really work out that way. We were talking before, a lot of people just use it to set timers when cooking or play music or check the weather. This is supposed to go beyond that. And they seem like they do have a good strategy laid out. They're working with different companies to get their applications in there. And so we'll just have to see. But Andy Jassy was also there kind of bragging about Amazon's AI capabilities as well. But this was definitely an event all about the hardware and software there.
Mine is mostly used as a kitchen timer.
I mean,
and she mostly hears me okay for that. And she always says, "Good evening, Julie." She recognizes my voice.
Siri doesn't listen to me for anything, and it's crazy. I'm like, nope, no.
There's a very well, I listened to you just now.
Don't listen to me.
Of all the times.
Yeah, it's the only time.
Thank you, Dan. Appreciate it, my friend.
For sure.
Well, folks, we are just about an hour away now from the earnings report we've all been waiting for. In the 4 p.m., we're going to get you the latest results from NVIDIA, as well as instant analyst reaction from the report, as well as the earnings call, of course. Stay tuned for Yahoo Finance's special coverage of NVIDIA's fourth quarter earnings report that starts at 4 p.m.
Shares of America's largest solar manufacturer, First Solar, jumping following a mixed earnings report. The company did beat revenue expectations, did miss on earnings per share. The company also flagged several challenges it's facing on its earnings call, including a lawsuit against a Chinese competitor for patent infringement, $56 million in warranty charges, and a challenging market in Europe, forcing them to pull some salespeople out of that region. But it was on that warranty issue where it seemed like analysts were reassured that it was not more extensive. The company last quarter also had a cost. It had to do with some of performance issues in some of its solar modules.
Yeah, Truist likes this name, told clients, while the company's 2025 guide is not without risk, we believe they largely quelled most of the more bearish concerns they say into the print around warranty charges and volumes, and it seems like investors agree, at least today.
Yes. We're also watching shares of AppLovin. Those are sinking. They were briefly actually halted for volatility in earlier trading after they got targeted by short sellers. Culper Research, one of two firms that disclose short positions in AppLovin, says the company force feeds app installations onto phones to drive revenue higher. We have reached out to AppLovin and have not yet received a response. Joining us now to discuss this is Michael Pachter, Wedbush Securities Managing Director of Equity Research. Michael always has a response, of course. And so we were curious to get your take on this. I mean, AppLovin has been a monster in terms of the stock doing well. And so now we're also seeing an outsized reaction to these short reports. What do you make of them?
I mean, they're extraordinarily poorly reasoned. And I mean, I've read them all. They reflect people who don't play games, which is less than half the population. They absolutely have no idea what AppLovin does, which, join the rest of the world. And they've focused on two areas that are tiny to allege massive fraud throughout the whole system. They're focused on hyper-casual games, which is at most 5% of the market, more likely 3%. And every example they gave in each of the 4 reports about circular advertising and double counting revenue and fraud was a hyper-casual game. And a hyper-casual game, just for your viewers' edification, is a game that doesn't have in-app purchases. So by definition, because there's nothing to spend on in the game, their goal is to inundate you with ads. So if you read the Bear Cave report from last week, Edwin Dorsey saw 11 ads in 40 minutes. I play in-app purchase games. You're lucky to see 1 ad a day. So it's just a completely different market. Lauren Bialik is all upset that these hyper-casual games are advertising their other games and says it's a Ponzi scheme. That's the model. They want to keep the player watching ads, so get him to install other games. Today's reports, the fuzzy, whatever, Panda and Culper, we're talking about how you can't close the ad out, or, oh my God, there's side loading of the game and you didn't even ask for it. In fact, and I play everything, I play hyper-casual games, the player is actually given a pop-up screen that says, by installing this game, you agree to let other games from us, from the same publisher, be installed. If you say no, it won't happen. If you're a doofus and you click yes, you're going to get other games installed. BFD, AppLovin doesn't get paid for that install. So the focus of these reports is something that just doesn't add up to very much at all. It's not going away. They're going to continue to have hyper-casual games. But as I said, it's at most 5% of their business, likely 3%, and it will stay at 3% as the industry grows. So really stupid, and there's plenty of other stupid in there, but I figured I'd give you a chance to comment. And you're with Tevye today.
Yeah, Tevye. I knew that was coming, Pachter. I knew that was coming. Let me ask you this, Michael.
Tevye, you guys, those beards are killing me. Okay, go ahead.
Let me ask you this. The other part of the argument seemed to be, Michael, to your clients, that this is a company whose financials are audited. You also suggest that, listen, if they were really committing fraud, stop me if I have this wrong, but you seem to suggest if they were really committing fraud, at this point, your argument would be, listen, some former employee or advertiser or rival would have flagged it.
Yes, I mean, we have whistleblower laws, so current employees are protected if they blow the whistle. Regulators have an incentive to uncover fraud. Consumers have an incentive to report fraud. And I only said auditors as a joke because they miss it all the time. But if there were any meaningful material complaints against the company, if there was any pending legal action, then an auditor would have to flag that and qualify its audit. We've seen none of that. And the allegations in these short reports is that they've been going on for years. So I'm sorry, I just don't buy it. And the one that just made me laugh out loud was, trafficking sex ads to underage girls. Like, I don't even know where that came from. Yes, there are sex ads on the internet, go figure, but they're on porn sites. And if underage girls are on porn sites, they're seeing those ads. They're not delivered by AppLovin. So, I mean, that was like the sensational piece to try to make sure they got everything in there. You know what none of these reports mentioned? That AppLovin's overvalued. And I would have been okay with that. If they had said it's trading at 40 times EBITDA, and here's why EBITDA is not going to be what analysts think, I can't argue with that. They're entitled to that opinion. The fact that none of them mentioned valuation tells me they're out for sensationalism. They're all covering their shorts right now because they got the reaction that they wanted.
And Michael, I just want to update our viewers because we did get a response from the AppLovin CEO who posted a blog post, Adam Farugi, posting this. And among other things, he addresses the thing about children's data. He says, we do not track children's data. Our terms and policies explicitly prohibit apps exclusively designed for and or exclusively directed to children. So that, among other things, it's a lengthier situation here. He did say it's also noteworthy that the short reports emerged after our earnings report, where we would be in a period of being unable to respond with financial performance, so that they can't come out with numbers, in other words, because of being in a quiet period. There's something else that struck me that you kind of mentioned at the top here. In this Fuzzy Panda report, they say no one seems to know what AppLovin does. Obviously, you know what AppLovin does. Explain for people.
Yeah,
we've been talking around it, but explain for us clearly, what does AppLovin do?
And I apologize because I am so arrogant and I don't have a humble bone in my body. I understand what they do. Look, they deliver ads, primarily ads from mobile game makers to mobile game players, and the goal is, after you see the ad, they will convince you should download the other game and then play it. And so the run rate, for every 1,000 ad impressions that they get, Unity was running at about 1% conversion, meaning 10 people downloaded the game after watching the ad. And for AppLovin, they get about 22%. So they doubled the number of installs, of conversion of ad impressions. How did they do that? The truth is, AI, machine learning, large language models, they analyze data, they figure out who spends money, who plays which games, and it's obvious. If you advertise a slot machine game to another slot machine game player, of course they play slot machine games. But what if you want to advertise Call of Duty shooter game towards a friends players? Do they play shooter games? And the answer is, some of them do. Right. The educated young males do. And so AppLovin has the algorithm that says, oh, we can target the educated young male in Words with Friends and convince him to download Call of Duty. And it works.
Michael, finally, you mentioned the valuation issue, right? Which maybe is more, in your view, a more legitimate debate to have. I mean, the stock is up more than 450%. Even with today's decline, it's up more than 450% over the past year. According to the stats we have on our Yahoo Finance platform, it's trading at something like 74 times trailing earnings. That's a pretty high valuation. So is it still worth buying here?
Yeah, it's trading at around 25 times forward earnings, and I'm saying 2 years out. And that's expensive. That's kind of Facebook level. And you're willing to pay that if you think that earnings growth is going to be phenomenal, 50% a year or something. That's where we are. They're growing 5% per quarter sequentially, not year over year. So they're growing at over 20% per year, more like 25. Last year, they grew 70-something%, which is why the stock has ripped so much. A lot of analysts think they're going to grow 30 or 40 or 50% this year. And incremental revenue comes in at something like 75% profit contribution. So it's massively profitable as they grow revenue. Revenue's growing because ad budgets for mobile games are total around $40 billion. It's that big. And about 18 billion of that is inside mobile games. And AppLovin is capturing about 10 billion of that. Does that 18 grow to 35 or 40? I think so. Does AppLovin capture more share? I think so. Do games start carrying brand ads? I think so. Will AppLovin compete? I think so. So I can justify a price of over $500. And that's where the stock was approaching a week ago.
Yeah, and your price target for over 12 months is 620. Michael, thank you so much from Tevye and I. We appreciate your time today. Appreciate it. Thank you.
All right, thank you.
Coming up, it's the latest edition of our series, Goodbye or Goodbye. We're taking a deeper dive into 2 stocks to help you make the best moves for your portfolio. Stick around, much more market domination still to come. It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Today, we're taking a look at stocks in the AI race related to them. I'm here with Jensen Investment Management Portfolio Manager Kevin Walkish. Thanks for coming in.
Great, thanks for having me.
So let's talk about your buy stock. It is Accenture, and this is a really interesting one to me because it's not one that people automatically think of when they think of the AI trade, but they have really been, their consultants have really been working on training and improving people's understanding of AI here. So the stock hasn't done much over the past year, but let's talk about why you like it here. Why is it positioned for AI leadership?
First and foremost, a $3 billion commitment to tool up for AI so that they are enabled and ready to deliver AI for their clients. Historically, a similar sort of investment was made for cloud back in the day, similar commitment. It was an opportunity where they ultimately took a lot of share. And really sort of grew in excess of the market. So we think they're incredibly well positioned from an investment standpoint to really prosper from AI. We also like the fact that they don't have to choose the winning AI. They just have to maintain their market performance, market leadership in terms of being able to execute in terms of implementation and helping their clients. And so in that regard, there's a strong sort of risk mitigator or a play where you don't have to really choose the right one, just choose the momentum, which we think is going to be very strong long-term for the enterprise. And we think they're well positioned for that.
So in other words, you know, Accenture as a huge consultant, I'm a company, I say, I want to implement AI, but I don't know how, I don't know where, I don't know what vendors I should use. That's where Accenture would come in and just help you do all that, I guess.
Absolutely, and they've had long-standing relationships with their clients, a lot of their clients. So in terms of IT services, they're a global leader. They have the greatest breadth in terms of services, but also greatest global reach. They have a large number of clients that are basically booking revenue of over 100 million a year. They call them diamond clients. So these relationships are very long-term and very ingrained. And so when we think about their ability to sort of coach and really help their clients understand and evolve with the advent of AI, like they've done with all other technologies historically, we think, again, that's going to be a strong value driver for them.
And speaking of technologies, you mentioned this one, enterprise cloud, which isn't going away.
Right.
So there were some opportunities there.
Absolutely. When you listen to Accenture, they say really only 40% of all enterprise loads have moved to the cloud. That means there's another 60% of uplift. You also really can't do AI without cloud. And so what you're seeing then right now is a large scramble to basically be cloud enabled and then AI enabled. So that sort of sideline, demand that was on the sideline for cloud is getting pushed to move quicker, to be prepared for AI as they want to go down that implementation curve.
And let's talk about the implementation. You think there is that big profit uplift as they send out their army of folks to put this into place?
Absolutely. They have 774,000 employees globally. They focus on IT services and IT implementation. Well, AI is really geared towards developing efficiencies and optimization within the space, specifically software. The more I talk with software engineers, the more efficient they have been already. And so when we think about them leading sort of best in class in terms of business functionality and operations and management, they always turn that lens on themselves. So we think there's a great opportunity where they can really optimize that employee count. And we think there's opportunity where they can deliver more value, probably with a lower headcount.
Kevin, I don't usually do this, but I'm going to go backwards for a second to the chart. Why hasn't the stock done better if they are indeed poised to, you know, take advantage of all this stuff?
We think there's a short-term misunderstanding in the market. You know, we think the market is very focused on today's sort of revenues, which are a little bit muted. If you kind of go back and you look at long-run sort of average within this market, it's a high single-digit type market. They've been able to hit that. They've been able to exceed that and take share. When we saw COVID, we saw a massive pull forward in demand. So their revenue jumped 3x of growth. So they're in the 20s. What we're seeing then right now is sort of a lull. It's sort of a tough comp situation, but also on the doorstep of AI. These large IT buyers that want to spend $100 million a year are pausing to understand where they want to position. And so they're just taking a pause. We think the market is too focused on the short term, thinking that this is going to go on into perpetuity. We think the market's going to rebound. And we're already seeing that this year. So.
One other thing we like to talk about is what could be a risk here, and it could be perhaps that it does take longer to ramp all this up.
Right. It looks like, you know, from our opinion, the market, the street, is really sort of focused on quarterly earnings. They're going to release next month. What we're seeing is there's a laser focus on how much bookings they're already doing in AI work, the rate of growth, and the relative contribution relative to revenue. If that's not quite meeting the street's expectations, we think that gives more short-term headwinds. But again, we think that builds up potential for long-term returns.
And you guys have a position in Accenture?
It's one of our top positions.
Okay, let's get to the one you don't like. This might be a little controversial. It's Meta. The stock's up 40% over the past year. Everybody seems to love it recently, which maybe is part of the problem.
Right. I mean, I think, if you look at it even year to date, it's up almost 14 times the street. As you said, it's up 2x last year. It's up multiples in 3 and 5 year periods. Strong momentum play. Fundamentals do look interesting. It does look, I'm a quality, large cap quality growth manager. I want to look for consistency. I want to look for sort of some risk mitigation. And when I look at Meta, I don't see a lot of risk mitigation. And so I think the path for owning Meta in the ride is pretty bumpy. And right now, it looks like there could be cresting.
Yeah.
And so right now, it looks like if you're putting money to work, there might be other opportunities that might do better.
Well, and speaking of that, the bumpiness, I mean, it's been pretty volatile, to your point.
Absolutely. And, this goes back long periods of time. You have, while Mark Zuckerberg's done a great job, he has a high degree of control within the business, more than we see in other businesses. And that's led to some questionable decisions in the business in terms of direction and focus. And so it's always been, from a leadership standpoint, a little bit uncertain. And we think that's sort of played out in the performance of the business. And then ultimately that's manifested into the performance of the stock.
Well, that sort of has something to do with the next point as well, which is the regulatory and litigation overhang.
Right.
Which is interesting because Zuckerberg is obviously, definitely allied himself with this administration. Does that remove any of that risk?
I think domestically, there's probably some mitigation to the risk, but I don't think it's going to go away. And I think that what we've seen in other names that are large cap tech names that sort of face similar sort of litigation and regulatory challenges, it tends to be a little bit of a brake or governor on stock price performance and adds a layer of volatility and uncertainty. So we don't think they're going to escape it. We still think the target's on their back. We think social media has a larger target than others within the tech space, and we don't think that'll go away. And then we also think the EU is not going to let up in terms of their regulatory and litigious eye towards.
Yes, and he's not allied with them. So, and then what could go right, I guess, here is that they could continue to sort of harness AI and monetize it.
Right. I mean, we got to give them credit. They've done a good job of applying AI to their own business. They're seeing good execution in terms of their core ad business. They've really extended into the consumer electronics with the AI-enabled Meta glasses. So you're seeing sort of forays into that. And then the Llama model, which I think they'll have a hard time really sort of getting traction within the enterprise space because they're so new. It takes a long time to build that credibility. So there are some successes, and so if they can continue to build on that in a very consistent way and maybe a little bit less volatile, we could definitely see some more runway, and I think that's where I'd be wrong.
And any position in Meta?
We have no position in Meta.
Okay, Kevin, thanks so much
Great.
for coming in.
Thank you so much.
Appreciate it. And thank you so much for watching Goodbye or Goodbye. We'll be bringing you new episodes at 3:30 p.m. Eastern.
Senator Elizabeth Warren is pressing one of President Trump's top economic picks to explain his stance on Federal Reserve independence. Joining us now with more is Yahoo Finance's Jennifer Schonberger. Jen.
That's right, Josh. The top Democrat on the Senate Banking Committee this week sent a 27-page letter to Stephen Mirren, President Trump's nominee to chair the Council of Economic Advisors. Warren asked him to clarify his positions on everything from tariffs to tax cuts ahead of his confirmation hearing on Thursday. When Warren raised the subject of the Fed, she noted that Mirren has, quote, called into question the central bank's independence, citing a report Mirren co-wrote last March, arguing that Fed board members should serve shorter terms and be fireable at will by the president. Warren wrote in the letter, quote, will you commit to supporting the Fed's independence from political influence? Do you believe the president can fire at will a board official? Mirren, who served in President Trump's first administration in the Treasury Department, has been highly critical of Fed Chair Jay Powell. He posted back in September on X that, quote, Powell was wrong politically and economically when he urged Congress to go big on fiscal stimulus in October of 2020 on the eve of a presidential election. We know what happened next. In his opening testimony, Mirren is not expected to address Fed independence. Instead, he will push a plan to reindustrialize America, saying that this is important for our economy and national security. Back to you.
Thank you, Jen. Coming up, Eli Lilly announcing it is ramping up its U.S. manufacturing. We'll get you the details on the other side. Stick around. Much more market domination still to come.
With increased market volatility and the threat of tariffs looming, investors have been searching for safer havens, and the healthcare sector's been front and center. So far in 2025, healthcare has outperformed the Dow, the S&P, and the Nasdaq, although not every company in the space has been the picture of health. But let's take a look at the overall sector picture so far for the S&P 500 this year. The S&P itself up by about 1.4%, but healthcare has been the best performing group. This is a look at today's chart. If you look at it year to date, you see here it is up about 7.5%. The 1 year chart less positive. So really the comeback has been this year where we have seen this strength. And you can look at a couple of the different subsectors, if you will. This is looking specifically at the pharmaceutical group, and you can kind of equal weight it to get a look. CVS has been the best performing individual stock within that S&P pharmaceutical index. It's up almost 42%. Viking Therapeutics, one of those that has seen a pullback here, but by and large, the drug makers have done pretty well. Then you have the sort of some of the insurers, pharmacy benefit managers, UNH, as we know, United Health, under investigation for some of its billing practices. Those shares have pulled back. This has been more of a mixed bag, even though there are a lot of questions about, for example, the new budget that just passed and what effect that is going to have on some of these companies, also some of the cuts that are happening. If you look overall within that S&P healthcare index, as I mentioned, CVS is the best performer. Solventum is one of the best performers as well. Here's CVS. You can see the shares up more than 40% year to date, getting a big leg up in particular after its most recent earnings. Solventum rising after it sold a unit to Thermo Fisher, among other things. So there's sort of some one-off reasons for some of these companies doing particularly well. On the bottom, West Pharmaceuticals is the worst performing stock within this group year to date. So it's a mixed bag under the surface, even as the group overall has definitely outperformed the S&P 500. Well, sticking with healthcare, Eli Lilly announcing it will invest at least $27 billion to build 4 new manufacturing sites in the U.S. For more, we're bringing in Yahoo Finance senior health reporter Anjali Kamlani. Tell us about this, Anj.
That's right, Julie. We got a quick peek at what the plans are for Eli Lilly's manufacturing sites, but no locations just yet. And this was at a big to-do event down in D.C. with Eli Lilly CEO Dave Ricks, joined by Commerce Secretary Howard Lutnick, as well as some other government officials, really touting the idea of U.S. manufacturing. So take a look at the numbers. We've got 4 new sites planned, in addition to a handful of others that have already been announced last year, 10,000 new construction jobs, 13,000 new skilled worker jobs as part of this growth. And that brings the total of investment from Eli Lilly since 2020 to $50 billion. Now, most of the work that has been done in the past couple of years has been a focus on the GLP-1s, that blockbuster product line that we know Eli Lilly is after and has dominated the U.S. market with. We are seeing that sort of play into this as well. We know that, with the competition with Novo Nordisk, Eli Lilly has the leg up here in the U.S. and it seems to be halting other markets in favor of pushing its efforts here in the U.S. So that's something to keep an eye on. Meanwhile, just taking a look at, how this all panned out, we did hear from the CEO earlier today at the event talking about, the reason behind this reshoring or rather opening of the manufacturing facilities and focusing on U.S. jobs, and really taking a look at the Trump administration, the tariff wars that are pressuring the Chinese manufacturing for active pharmaceutical ingredients. That's a key part of this. And that is what 3 of the 4 sites are going to be dedicated to, according to Ricks. That spurred some commentary from Howard Lutnick, who said, quote, Eli Lilly is doing exactly what the president was hoping would happen. So very clear that this company is sort of taking into account what the Trump administration is saying, what President Trump is saying, and in some ways paying attention to and responding to that in hopes of possibly favorable policies that help, especially with tax cuts. He pointed that out as well. CEO Dave Ricks saying, quote, we look forward to partnering with this administration to finalize a proposed rule to cover medications for Medicare and Medicaid. And that in reference to the GLP-1 products, we know that has been an issue with regard to weight loss. And so that is another thing that it seems like the company is looking to work with the administration more closely, thus the event in D.C. today.
All right, thank you, Anj. Big story, big headlines. Appreciate it. Drug compounders aren't ready to give up their ability to produce off-brand versions of Wegovy and Ozempic without a fight. Earlier this week, a compounding industry group filed a lawsuit in Texas arguing the FDA's finding there was no longer a shortage of the active ingredient semaglutide was arbitrary. Same group filed a similar lawsuit last year after the agency removed the active ingredient Zepbound and Mounjaro from the shortage list. The case is pending. Joining us now to help us better understand how to play the GLP-1 makers is Jared Mizuho, America's healthcare equity strategist. Jared, always great to see you, have you on the show. I want to start, Jared, actually, just with your take on the story we were just discussing with a colleague. Eli Lilly saying, listen, they're going to plan to spend $27 billion, Jared, on these new U.S. plants. I'm curious what you make of it. What do you think President Trump makes of it, Jared? I mean, it would seem to broadly dovetail with some of his policy priorities.
Thanks so much for having me. Yeah, I think there's a lot that goes into this. I mean, the first thing I thought about was along the same lines of, what Howard Lutnick alluded to, which is to say more domestic production of these drugs, get more facilities, more jobs in America. I think that would be the first thing. Second thing is that this kind of would circumvent or at least alleviate any tariff issues. I know a lot of investors are talking about the effect that tariffs may have on drug importation in terms of whether it's the drug itself or various ingredients from China, from Europe, whatever. And I think at some point, this company was going to make more investment in manufacturing anyhow. So to do it here, I think gives them a leg up.
Does it give a leg up for people who are buying the drugs, though? Is it going to make drugs more expensive, even if you account for that tariff differential, Jared?
I don't think so. I mean, I think the trajectory of these GLP-1s in terms of pricing is definitely down. Lilly put out some news this week around lowering the price of certain doses through their Lilly Direct offering, which is essentially about 50% of the list price of $1,000 down to around $500. These are rough numbers, but I think when you look at the pricing of these drugs as they become more widely available and as manufacturing scales up, they're going down. And when you kind of look at all of the health benefits as well, and this is where I think, I don't know if investors are necessarily all agreed here, but I think the clinicians are, that the other benefits that you get from taking these drugs, I think make the drugs look very, very cheap relative.
What other benefits are you referring to, Jared?
Cardiovascular outcomes are excellent. It reduces heart attack rate. It reduces stroke rate. I think there's some inflammatory benefits you get with this. It helps with sleep apnea. The companies are working on the drugs in use with various neurological diseases, Alzheimer's. That data has not hit, but that might hit later this year. So along with the weight loss, you're getting all of these other benefits that are statistically significant if you look at the clinical trials. So I think when you look at what the drug can do in totality, $500 a month, $1,000 a month, versus some of the cost of these other treatments that we have on the market, seems very actually inexpensive.
I'm curious, Jared, when does the pill come? And what is that going to mean for the market?
The pill is very interesting, probably one of, a top 2 or 3 item for me in this entire sector. I think around the 2027, 28 timeframe, I think there will be a pill on the market, maybe a little bit sooner, but around 2027. And I think what that does, it does 2 things, right? One, for anyone that's kind of been avoiding the injections, either because they don't have access to it or they don't like the modality of the injection, it gives them a weight loss drug that they can take more easily. And the second would be for anyone that's already lost weight, that's taken the injection for maybe a year or 2, that wants to kind of take themselves off of that treatment, but still keep the weight off. That's where I think the biggest part of the market might occur.
And Jared, what role do the compounders play, right? Because it seems like they're going to have to stop selling the compounded versions. When do you think that happens, or how long do you think there might be a sort of protracted legal battle?
Yeah, it's a great question. I don't really know is the honest answer. There are so many variables that go into play here. I think the most interesting thing to consider might be RFK Jr.'s stance on GLP-1s and some of the other politicians that are going to be in this administration that think that the health benefits that patients get from these are overwhelming, and they want more patients on the drug. And if the compounders are leading to more prescriptions and more use, maybe that would be good. I don't think that's a consensus view, but I think that's something that has to be considered out there. In terms of the timing, don't really know. Around 2 to 3 months, I think, before compounders, including the Hims and Hers and Roe and other companies, would have to stop selling the branded drugs. But it sounds like they're working on, at least circumventing it to a degree by offering different doses or different formulations that are not literally the same drug. So we'll have to see how it goes, but a lot of moving parts there.
Jared, always great to see you and to have you on the show. Thanks for joining us.
You bet. Thank you.
And while we're wrapping up today's market domination, don't go anywhere. On the other side of the break, it's the earnings report we've all been waiting for. We're going to get you the latest results from NVIDIA, as well as instant analyst reaction from the report, as well as the earnings call, of course. Stay tuned for Yahoo Finance's special coverage of NVIDIA's fourth quarter earnings report that's coming up next. NVIDIA has dominated the AI chip sector over the past 2 years, spearheading innovation with its next-generation AI chip, Blackwell. The company seemed unstoppable until Chinese-based AI software firm DeepSeek replicated an open AI model using older microchips, triggering a sharp drop in NVIDIA's stock price and market share. Since then, NVIDIA has stabilized and is set to release its highly anticipated Q4 earnings today. We're going to find out how the company performed next.
You're seeing markets being absolutely eviscerated on news from a company most people have never even heard of. It's not deep fake, it's DeepSeek. So the fears on the street is that a lot of this AI spending will be dialed back. That will, of course, impact or potentially impact the likes of NVIDIA.
Nobody in their right mind thinks NVIDIA is a monopoly. There's tons of competition, but all the earnings multiple estimates are based on them never having competition.
Now, I would say, I wouldn't want to be Jensen necessarily because, wow, other people are working on the same things. But, so far, he has stayed way ahead.
Welcome to our special coverage of NVIDIA's earnings report. And we're less than 30 minutes away from the results. We've got every angle covered and what investors need to be watching from the numbers. Also, the commentary on the conference call. NVIDIA shares rising into the print tonight, up nearly 3.5% on the day, although, of course, they have been falling in recent weeks.
And we are just moments away now from NVIDIA earnings. Dan Howley, Yahoo Finance Tech Editor, is here with the key items to watch. Dan.
Yeah, that's right, guys. There's a few things that I'm going to be looking out for this particular earnings announcement. Let's start with number one, the first quarter guidance. Obviously, for this quarter, we want to see if they beat on the revenue, which the expectations call for $38.2 billion, and earnings per share 84 cents. But we really also want to know more about Q1 guidance. We've heard all of these companies talk about how they're pouring money into AI. Does that include buying up a ton of NVIDIA chips? We shall see. I think the next thing that we're going to look for is specifically that cloud segment revenue. Now, in the CFO commentary, Colette Kress usually goes into how much of their data center revenue is coming from the big cloud providers. Last quarter, it was 50%. Figure the cloud providers are the Microsofts, the Amazons, the Googles, the Metas. They're all buying these chips up by the bundles. And so we'll want to see if that number's getting larger, getting smaller. And then the reason for that is because there's all this talk of ASICs, or application-specific integrated circuits. And so those are basically chips that are designed specifically for certain tasks. Google has their own in their Tensor TPU. Amazon has their own chip as well. Microsoft's working on their own. And so the fear is, at least for NVIDIA investors, that these companies will become less dependent on NVIDIA over time. And yet Bill Gates obviously talking before about how, there's a lot of companies that are coming for NVIDIA. And so some of its own customers may be as well. And then the final thing, Blackwell chip revenue. This is we're going into the year mark almost of when they announced Blackwell initially. What does that look like as far as the mix when it comes to revenue? We want to hear a little bit from Jensen Wong, the CEO of NVIDIA himself, when I spoke to him out at CES in Las Vegas earlier this year.
I would suspect probably early this year. I would like it to be as soon as possible, but of course Blackwell is still in allocation, and we're trying to ramp up the production, and but it'll be soon.
So yeah, that's one of the big things that we're going to be watching is what does that mix look like now? Is it more Blackwell than Hopper? Is it still a lot of Hopper versus Blackwell? We'll just have to find out when they announce these earnings at 4:20.
I'm also curious, Dan, listen, they've consistently talked about demand for Blackwell, but they also have always talked about consistently demand is outstripping supply, right? And so do you think we get any more color and commentary about that dynamic and how that's evolving?
That's something that we're absolutely going to want to learn more about. Are they able to ramp that up? Look, they're not just ramping their data center business, which is obviously the most important. They're also ramping up the smaller gaming side of things because they announced those at their event at CES in January.
Well, remember back in the day it was all crypto and gaming.
Oh,
remember,
yeah.
that was it?
That was it, right?
Yeah.
Crypto punks took all the gaming cards and I couldn't play. But yeah, I think that's something that's definitely going to be of interest is where does that kind of allocation of ability for capacity live at this point? And to that point, it's not just NVIDIA that's saying, look, we're supply constrained. the cloud providers are saying that as well. Amazon, Google, and Microsoft said, look, we have more demand than we have supply when it comes to our AI capabilities. And so that was kind of part of the reason they used for the not exactly impressive showing they had in their various cloud segments. They missed a lot, not a lot, but they each missed in some degree on their cloud revenue versus expectations. So that's part of this whole equation now. Does NVIDIA hold them back? Is NVIDIA holding them back? Does that mean they lean more into the ASICs? Do they go to competitors? I think, if you look at developers, they want NVIDIA because they use NVIDIA's software and they're more comfortable with that. And so, you're going to go with what your customers want. It's NVIDIA at this point. You just, got to make sure that NVIDIA can continue to pump out the chips for you.
And then another big question for me is, and I don't know how much they're going to be able to say about this on the call today, but what happens in China, right? What happens between the U.S. and China? Will we see an increase in export controls? As we know, there's already export controls on NVIDIA chips into China. So NVIDIA now sells sort of a not as fancy, not as advanced GPU into the Chinese market. And so, if that gets even stricter, that could have a negative effect.
Yeah, it's the H20 that they DeepSeek used to develop its own AI models. And so that's something that, Trump has said that they want to increase export controls. Jensen had met with him. There's also the risk of, does DeepSeek mean that Silicon Valley companies are overspending because they managed to do this with a less than top-of-the-line chip? Jensen Wong had done some interviews and given a statement on that, basically saying this is good for us because the type of model that DeepSeek uses benefits from more powerful processing. And so that would then mean that the more power you put behind it, the more high-end cards that can power it, the better the responses will be for queries to those kinds of models. So, there's this kind of back and forth. Is DeepSeek good? Is DeepSeek bad? What do the tariffs mean if they get implemented in addition to the export controls? He's talking about a 25% tariff on chips that are imported to the US. Most of NVIDIA's chips are coming from Taiwan, from TSMC. What does that mean for them then?
Right, yeah, lots of good questions. Dan, you're going to be back with us. You're going to be listening to the call, and you're going to help us alert us to what's going on there.
I had to get my third cup of coffee for the day.
Whew, okay. Godspeed, my friend. As we await NVIDIA's fourth quarter results, we're taking a look at price action trends for the chip giant with Yahoo Finance's Jared Blickery. Jared, tell us, what have we seen?
Yes, well, let's take a look at the NVIDIA board. This is year to date. NVIDIA down 2.2%, not the greatest picture here. And let me just go over to our earnings screen. I have prepared this chart, went back all the way to 1999, looked at all of the earnings announcements and the reactions in various time periods after that. So 1 day, 1 week, 1 month, 1 quarter, and 1 year. And this right here is the median returns, which is kind of like the average, going back 10 years. So going back 10 years, the median return 1 day after the announcement is 3.4%. So it skews positive. 1 week later, 4.3%. 1 month, again, in the same range, 3.4%. But you extend that to 1 quarter, it jumps up to 17.5%. And that's because we see a lot of intra-report volatility here. But the real returns come when you hold for 1 year or more. So at 1 year, you're looking at basically a more than doubling in price, 112% in that return. Now, I also have some other numbers here. This is the percent positive, that's 63% over there. That means that 1 day after, in the last 10 years, earnings reactions are positive 63% of the time, goes up to 68, then down to 60. Then finally, at the 1 quarter level, it jumps up to 74%, and then 84% after 1 year, which is very robust. I also went back to the beginning and thought it would be interesting to see how the positive and negative earnings reactions themselves, if you split it up that way, how they have changed over time. So this chart goes back all the way to about 2001 because I'm using a 2.5 year rolling basis or rolling average there. And that covers about 10 reports. And what you see here is a lot of volatility in some of these early years, which isn't necessarily surprising. And NVIDIA has always been a chip stock. It's always been a high growth or a high growth motivated stock. And so you've seen a lot of volatility back in the days when it was essentially a penny stock or just an early dollar stock. And you can see right around here, 2008, 9, 10, there's a little bit of a contraction. Then it expands again around the global financial crisis and thereafter. Then you get a lull in the action. But then around 2016, 17, it starts heating up again. And the earnings announcements to the upside, those starting to get more positive. Then you see a little bit of a decline here, and that brings us to the current epic. So let's take a look at what specifically traders and investors are expecting for tomorrow. So we have something called options implied volatility, and that has been on the rise this week. That is, if you take all the options for NVIDIA going 30 days out and you put them all together, you come up with a number. That is the expected move, and it could be to the upside or the downside. We don't necessarily know where it's going to go, but options traders are basically expecting a move of 10% over the next 24 hours. So we're looking into 4 p.m. close. Now, here's what actually happened over the last 2.5 years. You can see we had an earnings reaction of 11.1%, and that has been increasing. That has been on the rise over the last several quarters. And so that's a number that traders will pay attention to. And if you look at what the implied was, well, that's a little bit less than that. Finally, it compares to 4.3%. That is the average daily movement since the last earnings statement. Put it all together, we're expecting volatility. We just don't know the direction.
We won't until we get the numbers, and even then we might not know until the call. Jared, thank you. Well, NVIDIA reporting fourth quarter earnings in a matter of minutes. Joining us now, Corey Johnson, Epistrophe Capital Research Chief Market Strategist and host of the Drill Down podcast, as well as Dave Mazza, Chief Executive Officer of Roundhill Investments. Plus, we got a bonus here, Yahoo Finance Executive Editor Brian Sozzi. Everybody, thanks a lot for being here. I want to start with you, Corey, and you really dive deep into a lot of these chip companies here. What's going to be your thing you're zeroing in on?
Well, I mean, first of all, you guys are doing a great job covering this stuff. It's wonderful to have so much knowledge involved in this and preparation. I think we're at a point where we've seen NVIDIA grow at just amazing amounts. We've seen some of the greatest quarters ever put up by any company in the history of humankind, certainly in the last 300 years or so. It's just incredible numbers with incredible profitability and jaw-dropping growth, to go from 40 billion to 80 billion in a few moments' time is just an amazing thing. But of course, the stock was priced for that. So this is a stock observation, not a business observation. But at this moment, they can be both. Can they really go from 80 billion to 160 billion, or from 160 billion to 320 billion? It's hard to imagine. And so of course, we're always looking for softness in these likely to be incredible results. So some of the things that I'm looking for is are differing. But one is pricing. What have they done? What are they going to do with gross margins? How much gross margin can they take? Are their customers going to hate them for taking so much in terms of gross margin as well as operating margin and profits right now, such that they will cause them to go to competitors like AMD or like the custom designed silicon we know is coming out of Meta and Google, and as well as Amazon Web Services. So we want to keep an eye on what they do in margins and how much profit they're willing to take right now while they can, without fear of actually ruining the market over the long term.
Dave, I want to bring you in here as well. Dave, we just heard from the hyperscalers, those big cloud giants. They laid out, Dave, their CapEx plans, and they were impressive, right? I mean, that should bode well for Jensen Wong's business. But I'm curious, when this report crosses the wires, Dave, what are the data points? What are the metrics you're going to make a beeline for?
Well, I'm particularly focused, when it comes to CapEx, is on what's going on with Blackwell, right? Are we actually able to ramp up production? And are they, it's crazy to say, selling out of Blackwell, right? So we know that people are still installing Hopper-based systems. The Blackwell chips are even more powerful to allow for this scaling that happens, that's needed to happen, I should say. And so today, I think really the numbers, we expect them to beat again. The market's become so accustomed to them beating. They've done it. They've beaten the top and bottom line for 8 straight quarters. So it all comes down to the commentary. Particularly, are they able to deliver really on the expectations for Blackwell? And then separately, what's going on with China, right? So China is actually 17% of NVIDIA earnings, setting aside even some of the issues with DeepSeek and questions there. But are they actually able to navigate through that? in a way, or have enough revenue coming from other sources to make up for that manufactured slowing demand from China.
Dave, let me put this one to you. Does it matter? Let me think about it this another way. 3 years from now, is it NVIDIA up and to the right? Today I went to an Amazon event. Andy Jassy hops onto the stage, showing off this new Alexa device, doing things I've never seen Alexa do. And I'm sitting in this audience, Dave, I'm like, look at all the chips Amazon is going to need. Jassy started off the speech saying, we're a longtime partner of NVIDIA. Even though we're going to build our own chips, we're still going to use NVIDIA. I mean, are we just making too much in one quarter?
Well, it's interesting, right? So their customers are actually the ones sort of making some of the potentially the best chips. So the semiconductor space has been fascinating, right? Semi is sort of outside of NVIDIA and maybe a handful of others, AMD, as Corey mentioned, aren't really participating in building the powerful chips that are needed for this AI revolution. So NVIDIA has been the only game in town. You couple that with CUDA and the moat that they have around their chip ecosystem is one of the reasons why the stock has been so powerful, and everyone kind of has defaulted and been racing and fighting to implement their chips in their business lines. And so I actually do think that we're going to continue to see demand here. I think some of the fears are overblown of it being overbuilt because there's just so much potential that's needed across a multitude of industries. The question comes down to has the stock just become priced to perfection, and any smidge of bad news or any questions about really their train continuing to chug along is going to hurt the stock more than it probably normally would.
I don't know, Corey. I get nervous when somebody says 5 years out, a stock is definitely going to be up and to the right. But maybe that's just me.
But look where Apple was 5 years ago. Come on, Julie. Come on.
It depends on how much up and to the right too, right? I mean, 5 years out. I got a lot of questions.
Let's
5
think
years
about
out.
What is the business 5 years from right now? It might not be training, it might be inference.
Right.
And so I think that's the other thing we're going to really listen for is, yes, they may have been foundational to these foundational models, right? The ultimate training of these models to create these fantastic things that AI can do. But the inference could end up being really, really different. And we've seen that already. My God, in the last 6 months, you've seen giant LLMs spring up that are really good and others that were really good getting worse. You look at the competition between ChatGPT and Claude, or OpenAI and Anthropic, depending on how you want to look at it. And you see real differences in those models. You look at the struggles, I think I would call them struggles, that Gemini has had in Google, and their ability to create something that keeps up. That game's going to change a lot, and it's not just the building of those models, the training, it's the inference. And the inference chips and NVIDIA's share of inference chips, we already know to be not the stranglehold that they have in the training. So I think that it's hard to imagine what things look like. Maybe I wish you good luck imagining what 5 years looks like from now. I know it's going to be exciting, but I don't know what it's going to look like.
Who knows? Maybe DeepSeek will be a publicly traded U.S. listed company 5 years from now, and it'll be $1 trillion.
Maybe NVIDIA will own DeepSeek, Julie. Who knows?
I mean, there are so many possibilities.
Maybe
it boggles
we'll all
the
be
mind.
part of China.
Also, 5 years ago,
Corey, bite your tongue.
We wouldn't even be having this NVIDIA special, would say 5 years ago. This was a company, I mean, Josh, you know too. I mean,
Crypto and gaming.
Crypto and gaming. That's the only thing they did. Now, 5 years later, this is a company laying infrastructure around the world for AI, which also nobody was talking about 5 years ago.
Well, let me ask you, David, as you head into this report, if one of your clients, Dave, came to you and said, listen, what are the risks I should think about before moving into NVIDIA? You would say what, Dave?
Well, look, I think what Corey mentioned, I want to pick up on that on the inference side. So much of the really computational challenges happen on the training, right? That's where you need these incredibly powerful chips and need as much of them as you can, because it's an arms race to create large language models. When you get to the inference side, you don't necessarily need NVIDIA's best chips. You can sort of find other supplies for that. So to me, that's just sort of a longer term risk to the stock. I think the biggest thing here is that fortunately, heading into this earnings season, the stock's basically been a neutral performer. It's been pretty disappointing. Heading into last quarter, it was just continually ripping, priced to totally perfection, and really hard outside of just incredible guidance for that to happen. When I think about the name, it's a name that we still like. We still own it. It's our largest weight in our generative AI ETF for good reason. The really challenge is how much can you keep adding to it unless you see further catalysts going forward. And that's really what we're focused on going forward, because we know that kind of much of the questions about the stock, Jensen Wong is talking constantly and selling the NVIDIA story in a very powerful way. And the results are real from a revenue standpoint. And so the question is, what is it going to take for that to continue to go forward so that we can keep pricing in such a high multiple?
Right. Yeah, that really is the key question. Will that growth rate continue to propel the multiple? Guys, hold on, because we're going to get the numbers in a little bit. You guys are going to stick around with us as we await these numbers. As we've been talking about, yes, the fourth quarter is going to be important, but it's really all about the forecast and the commentary that we're going to be getting from NVIDIA as the numbers do come out. Usually they come out around 4:20, so it's 4:20 now here in New York. And there we go. We got the numbers here. So let me run through them. Adjusted earnings per share, 89 cents. That is above the 84 cents that was estimated. No surprise there. Gross margin, adjusted gross margin at 73.5%. In line with estimates here. Revenue, $39.3 billion. That's above the $38.25 billion that was estimated here. And that breaks down to $35.6 billion in data center, above estimates. Gaming revenue of $2.5 billion, which is below estimates here. Looking at some of the first quarter numbers here, we have $43 billion is the company's forecast for first quarter revenue, plus or minus 2%. The estimate was for $42.3 billion here. So giving them some room. And in the statement talking about the demand for Blackwell is amazing. That is something that we have heard from them before. And there is now ramped up massive scale production of Blackwell AI, that the company has successfully ramped up that production. That is what we have been looking for. Here's something, though, that we should highlight for you. The first quarter adjusted gross margin forecast from the company, 70.5% to 71.5%. Analysts on average had been looking for 72.1%. So of what I am seeing here, that's the first thing that I'm seeing where there might be a little scope for disappointment. The share's kind of bouncing around here as investors try to figure out what to make of it. But before we figure out what to make of it, we're going to find out what Josh and Saz make of it here.
The margins are really interesting because for Q4, they hit the bogey the street was looking for, it sounds like. And, you know, I was listening to a longtime tech analyst, Gene Munster, who was talking about the margins. He said, listen, they got to hit 73. That was the mark they had to hit, and they did hit that. The forecast, in terms of what they're looking on ahead, though, I think is also interesting. That's going to come up on the call immediately. What are the puts and takes that go into that, Joe?
Immediately, my head is thinking right now, earnings call by Jensen, I think he's going to look to eviscerate the bears. He's got a revenue beat at his hands. He's got an earnings beat. He's got what looks to be better than expected first quarter revenue guidance. These are very powerful things. So I'm expecting Jensen to get on this call very, very bullish. I think this margin guide down or disappointing margin that you called out, Julie, which was right on the mark, is expected. I think the street was looking for a squishy, a little bit of a disappointing margin out for the first quarter as Blackwell starts to ramp up. This quarter, by and large, looks good. Right now, I'm thinking bullish earnings call from NVIDIA. I'm also now starting to think about a lot of these trades, AI trades, tomorrow morning that could get us some tailwinds if Jensen nails this earnings call like I'm thinking.
Well, right now the stock is down 4%. So I don't know. You know, he may want to eviscerate the bears. It doesn't mean he's.
Well, I think it's the margin. I think it's the margin. I think it's the margin call, Julie. I think that's very important. I mean, I would argue the street really expected this. Keep in mind, you've had NVIDIA shares underperform the S&P 500 by 7% the last month. So the street expected, I think, some weakness in that first quarter guidance. What I would say they didn't expect is that revenue beat. And that's a good revenue beat. And
of course they expected the revenue beat. Come
look,
on.
The stock has been underperforming into this quarter. They were concerned if they were concerned about an inline quarter, top and bottom line, also concerned about that first quarter
If you didn't get a revenue beat, the stock would be down a lot more. I mean, if NVIDIA doesn't beat on revenue, like the sun is not shining, the sun is gone
Look
dark.
at the other side of this. Look what we're seeing from Salesforce tonight. I mean, they whiffed completely. I mean, the stock's getting hammered.
Comments from Jensen Wong, by the way, I just want to bring in here. Demand for Blackwell is amazing, he says, as reasoning AI adds another scaling law. Going on to say increasing compute for training makes models smarter, and increasing compute for long thinking makes the answers smarter.
I want to bring Corey Johnson back into this to get his first blush reaction here. What do you think about this margin forecast?
So this is what I said earlier, right? If they keep margins too high, their customers are going to be mad, and these customers are going to remember it, and they're going to design around it. So Amazon might come out and say, "Yeah, we love NVIDIA. We're always going to be together. We're couples forever." Yeah, sure. I mean, this is like the latest partner of whatever celebrity you want to name. It lasts until it doesn't, and I think that by taking a little bit of gross margin off, given they're not completely ripping off their customers, I think that actually builds for longer-term partnerships. Also in this press release, you guys didn't get to it is NVIDIA saying that they're going to be part of this big Stargate project, also going with the $500 billion that I think a lot of us have made fun of, because none of these companies, SoftBank, Oracle, OpenAI, have $500 billion, even $100 billion to put towards this project. But NVIDIA is saying they're going to be part of that, which is interesting because we know that AMD is already part of it. We've seen some engineers at AMD tweet out saying that they were going to be involved in Stargate, and we know that Oracle's got a long-term partnership with both NVIDIA and Stargate. So this may be the biggest project in building data centers out there if these numbers, if even a fraction of the numbers are to be believed. That NVIDIA will be a part of that suggests that they'll both be part of future training and future inference. And I think that that's a positive sign for NVIDIA here. But the stock bouncing around and not being off to the races like we might have seen in a quarter announced, 18 months ago, I think represents kind of the law of large numbers here. It just cannot continue to double and triple revenues quarter after quarter after quarter because they are reaching the limits of possibility here.
Corey, what do you think at the end of the day, what do you think the market may cue or zero in more? That margin, that soft margin outlook, or when you hear Jensen Wong say demand is amazing?
70% margins is not a soft margin outlook. It's softer than what these guys have had before. But when we look at, the once king of Intel doing single percentage margins, and that's the operating margins, and that's the best they've had in years. These are fantastic margins. This is fantastic growth. This is a fantastic quarter from a company that is performing fantastically. But I think this really is about the limits of the growth. As far as what the market's going to take away from this, who knows? The market in the short term we know is a voting machine. But I think that over the long term, what we see is that this company, NVIDIA, remains the central most important player in all things AI, more than any other company. I want to make another note too, and I haven't put this into my model yet, but we've seen, while China and export controls into China have restricted NVIDIA's growth there, and I think we might imagine that's going to get worse for NVIDIA and maybe better for the world if China cannot have AI to target weapon systems and do the other nefarious things that they've been accused of. But we have seen really strong growth in Singapore. And some of that surely is compute moving throughout Asia from China to Singapore. But there are concerns that some way China might be using some Singapore compute and growth in Singapore to get around export controls. And I think it's something worth keeping an eye on. Singapore was less than single digits. My goodness, 3 years ago, NVIDIA didn't report Singapore as an end customer, which means it was below 5%. Now it's well above that, and I think it's something to keep an eye on.
Corey, thank you so much for your perspective. You're going to stick around. We're going to hear more from you later. And Saz is going to stick around too. Joining us now with a closer look at NVIDIA's fourth quarter results, we've got Benchmark Company Managing Director and Senior Semiconductor Research Analyst, Cody Acree. Cody, so just give us sort of your first blush, top line, big picture reaction to these NVIDIA numbers.
Well, Julie, I thought it was a strong number really across the board. I think the gross margins coming in at 73.5% is key. I think that was a level threshold that they had to hit to keep investors even modestly happy. The guidance for gross margins at 71% is a little concerning. I think that's indicative of more pricing pressure, more competition from AMD, and more price sensitivity at their customers as they're investing their own dollars to create their own ASICs. And so I think that's just the future that NVIDIA has to live in. But demand for their products looks to be extremely strong, and that's really going to be the key for NVIDIA going forward.
Cody, I'm curious, conference calls coming up. If you had the chance to ask Jensen Wong a question or two, what would be top of mind off this print?
It's what is the investor appetite for diversity around both their internal ASICs as well as the competition's AI products from AMD and others. I think that is going to be key for investors going forward. That is obviously going to be key to their gross margins and the long-term spending split at their customers.
Cody, this first quarter guide for gross margins rightly in focus. Do you think this is the low point for NVIDIA's fiscal year and these margins ramp up from here?
I think it is. I think Blackwell comes in with higher margin contribution, and Blackwell's really just getting started, and then we head into Rubin next year. And so I think that NVIDIA has better margins ahead, and that their software-based, their CUDA-based platform is a key enabler of all of that, and that with their networking emphasis continues to drive margins higher.
The company also, just going through some of the CFO commentary from Colette Kress here, talking about that $11 billion of Blackwell architecture revenue in the fourth quarter. They call that the fastest product ramp in the company's history. And Cody, you know, the consistent message from NVIDIA ever since they introduced Blackwell is that they would be making even more of it if only they could make it fast enough. So when do they get to that full capacity, and what is that going to mean for revenue?
I think full capacity is always a moving target, as the industry has shown. We've got Meta, Microsoft, Google, and Amazon that have continually increased their CapEx budgets for 25 and are expecting even higher numbers for 26. And so I think that's a moving target. TSMC is ramping their leading edge capacity as fast as possible, and NVIDIA is absorbing the majority of that globally. And so I think that, again, that's going to be a moving target, and NVIDIA with their leading edge is just going to be chasing that demand curve.
Cody, fresh trade tensions now between U.S. and China. What does that mean for NVIDIA looking ahead?
It's unfortunate that NVIDIA gets the leading impact of this trade tension, but it just marks and highlights their leadership in the industry and how important they are to the AI movement. I think that this will haircut some of NVIDIA's opportunity in China, but they have shown that demand globally for their products is exceeding their own capacity to supply. And so I don't think that it impacts the numbers materially on a global basis, because there is more demand than there is availability.
Cody, appreciate that instant analysis, sir, and our thanks to, of course, Brian Sides as well. Thank you, guys. Appreciate it.
Sure.
Stick around. More of Yahoo Finance's special coverage of NVIDIA's earnings coming right up.
Well, NVIDIA has delivered yet another strong quarter. Much of its success depends on just a handful of companies. Last February, NVIDIA said a single customer had accounted for 19% of its total revenue in fiscal 2024. Joining us now is Ali Mogharabi, West End Capital Management Senior Equity Analyst. Good to see you. And we're learning in this past cycle that the company got 50% of its data center revenue from large cloud service providers, the so-called hyperscalers. Ali, where are we? You know, we know all the big amounts that those companies have pledged to build out their data centers. Where are we in that sort of spending cycle?
Well, it depends, right? In terms of the overall spending cycle, I think we're still far from the peak. But in terms of NVIDIA, I mean, there might be some questions because some of these hyperscalers have invested heavily in their own chips. However, you know, based on the Q4 numbers and also on the guidance, it seems like the demand for Blackwell, their latest one, is very, very strong. And one can only assume that actually is coming from the hyperscalers. So I think for the time being, the hyperscalers continue to look to purchase the NVIDIA GPUs.
You know, looking farther out, Ali, sometimes we ask these analysts who cover the stock, what's the competitive risk to Jensen Wong's company? They don't mention AMD, they don't mention Intel. It's interesting they'll mention Jensen Wong's own customers, those hyperscalers, as a potential competitive threat down the road. Is that how you see it?
That's how we're seeing it, especially with two of the hyperscalers, the Alphabet, the Google Cloud, and also Amazon, so AWS. They have actually been utilizing their own chips, their in-house chips, for a long time, especially Google. So and it also depends in terms of how much they can convince their clients, and I'm talking about the cloud players, those hyperscalers, how much they can convince their clients to go along with the in-house chips rather than the NVIDIA chips. So that remains to be seen, and that's one of the main questions that we're still trying to answer. But again, based on the guidance that these guys provided, their fiscal Q1 guidance, it looks like that demand for Blackwell, for the NVIDIA GPUs remains very, very strong.
You know, and we've been talking a lot also about the switch, the transition from training to inference in this AI cycle, right? First, the AI, for those who aren't familiar, first it learns, right? And then it uses what it has learned to infer, to basically come up with answers to prompts that you give it, et cetera. The common view being, well, maybe not the common view, the view among some that you don't need all of that power in a Blackwell chip for something like inference. Where are you on that whole question?
I think you still do. However, at the same time, I do think that demand for more customized chips could actually increase. But you still need all of that computing power for a few reasons, right? One is that it's actually a flywheel. So as more inference, more data is generated, and then the training continues. And then the other one is that as inference continues to improve, the application of all of this AI technology widens. So that means through it's going to be available and utilized by more companies on various different apps in various sectors and so forth. So all of that requires more power. It requires more chips. That's the way we're looking.
I want to get your take, too, on this back and forth, speaking of hyperscalers, that we saw about Microsoft. Ali, we had an analyst say they're canceling leases with private data center operators. That got folks worried, of course, about AI infrastructure growth looking ahead. Microsoft seemed to push back on that. Any thoughts, line of sight there, Ali?
There have been some reports. It's still a little bit unclear, but there have been some reports that some of the cancellations, some of the lease cancellations, may be due to OpenAI looking to utilize some other platforms rather than Microsoft. So the way we're looking at it is that yes, there may be. Again, it remains to be seen, but there may be some changes in terms of how Microsoft approaches it. But in terms of the overall demand for chips, and let's include, of course, NVIDIA market-leading GPUs, that remains pretty strong. That hasn't necessarily changed.
Ali, what would you want to know on the call here, like in terms of sort of the implications for the broader universe?
Yeah, it's interesting. The first thing that came to mind, of course, is DeepSeek. We want clarification on that. We want to make sure, of course, that NVIDIA clarifies, what the cost may have been, right? We certainly disagree. I mean, we don't think it was merely 6 million compared to the billions that some of the other, the hyperscalers have spent. So that's one regarding DeepSeek. And then the other one is, while it was good news, high demand for the H20s. I think there was an article published a couple of days ago. That's really good news. But we want to also make sure that the high demand for H20s is not necessarily cannibalizing the potential demand and ongoing demand for Blackwells. Of course, the numbers that they released today and the guidance that they gave doesn't really indicate that, but it'd be great for the management team to actually confirm that.
Ali, sometimes you'll hear an argument from NVIDIA bulls, and they'll say, listen, as long as the hyperscalers, as long as those big cloud giants are spending, and we, listen, you saw that during this earnings season, Ali, you saw the reports, you listened to conference calls, they sure are. Then they say you stick with NVIDIA. In your opinion, is it that simple?
It's becoming a little bit more complicated. I will say, though, that NVIDIA will still be the beneficiary for some time, but it is still becoming a little bit more complicated, mainly because of the in-house chips that they have and some of the other customized chips that others are working on. But again, with NVIDIA's market share currently, and I keep saying the guidance, the top line guidance that they provided, it looks like demand remains very, very strong.
Ali, great to have you. Thanks so much, as always, for your time and insight. Appreciate it.
Not a problem.
Coming up, we've got the numbers now. Let's hear from NVIDIA. We're going to bring you the earnings call. It's on the other side of the break. Stick around. More of Yahoo Finance's special coverage of NVIDIA earnings. That's coming right up. Time now to check in on the chip market reaction following NVIDIA's fourth quarter results. Yahoo Finance's Jared Blickery joins us now with the very latest. Jared.
Thank you, Josh. Somewhat of a muted reaction. You're going to see results here down 41 basis points. That's 0.4% since the close today. And you can see NVIDIA stock was up 3.67% only today. I'm going to show you a 3-day chart. So this is what happened this week. And I'm going to draw in here by hand where we saw the after hours high and low. Up by 136 was about the high and 128 was the low. So pretty muted when you consider the price action of this week. And if you recall my hit from just about 30 minutes ago, we were looking at a move of potentially 10%. At least that's what the options market was pricing into it. And of course, we have all day tomorrow as well. That 10% measures everything into the close the following day. So that is the 27th, Thursday. I'll just show you the year-to-date price action and kind of talk about what NVIDIA has done historically. This is a very much sideways chart. And even over the last year, we haven't seen the meteoric rises that we are accustomed to seeing with NVIDIA over this 2.5-year bull market. So things have slowed a bit. And let me just show you the last 3 years. And you can see some of these big run-ups that we've had before and really just kind of stalling out over the last 3/4 of a year. And so what does the future hold here? Difficult to say, but nevertheless, we have a pretty big trading range, and you got to think that we'll be testing at least one end of it within the next few days. Julie?
Jared, thank you. For more on the NVIDIA results and how the latest earnings from the company are expected to affect markets, let's welcome in Brian Colello, Morningstar equity strategist. The stock is not doing a heck of a lot at the moment, Brian. We've kind of seen it bouncing around a little bit as investors await the call. What do you think this sort of indecision is reflective of? What does the market need to know that it doesn't have certainty on here?
Yeah, that's a great question. And to the prior point about some of those exponential moves, that was very much during a time, let's say 12, 15, 18 months ago, where we didn't understand how much hyperscalers were going to spend on AI. So I'd like to think that the street and investors have sort of caught up on sort of the exponential boom. And so that way there hasn't been a ton of movement in the stock price, because I think we at least understand the near term that NVIDIA Blackwell product is very popular. They're going to sell everything they can, and hyperscalers are going to spend this year. So I think that's pretty much been priced in the near term.
Brian, on the Q1 gross margin guide here, they're calling for between 70.5 and 71.5%. Consensus, Brian, was closer to around 72.1%. So that does undershoot. I'm curious what you make of that. And more importantly, Brian, I'm just curious what do you see as the trajectory of margins for NVIDIA?
Yeah, that's my biggest concern and my biggest question going into the call as well, that it's only at 71%. I was even higher than that consensus piece. It does speak, we think, that the Blackwell products are expensive, that they're going to sell quite a lot of them, and it's high, obviously the highest performing product, but whether it's cost at Taiwan Semi or cost to assemble, they're going to be a little more costly for NVIDIA, and they can't pass that full price on to customers. So we do think that's an issue in the near term. And I think they've signaled too that really as Blackwell ramps, it's not going to be as profitable on the margin front, on the gross margin front, as Hopper. Hopper is probably peak margin for NVIDIA in our view on the gross margin line, because you had just the boom with a relatively more mature technology. Looking forward, low 70s are still a great gross margin for NVIDIA. If they're able to maintain that long term, I think the business will be just fine. But yeah, I think you'll have some ups and downs, and at the start of a new ramp, like something like Blackwell, you're going to see a little bit margin deterioration.
That's really interesting, Brian, because we've been talking about that whole margin question. There's also the question about the DeepSeek impact, because the thinking is that they'll be selling more chips to DeepSeek, right, and to those who are deploying DeepSeek in China. But that also, I imagine that product has a little bit different of a margin profile.
It could. It hasn't been noticeable whether it's been it hasn't had significant margin deterioration as they switch from the H100 to the H800 to the H20, and to the extent they sell more, yes, those will be lower priced chips, but it's still hard to imagine that NVIDIA doesn't retain the pricing power to pass them along. I think still the larger picture is that we are in this AI race, and companies will spend what they need to build the best products. So even as we think about DeepSeek and that sell-off a few weeks ago, the main concern at that time was that we're going to get slimmer models and fewer large build-outs markets. And if you listen to the hyperscalers, that slowdown isn't happening yet. They're going to take the best of DeepSeek, apply it to their own models, and continue to throw massive GPU clusters at it. And NVIDIA's results in the near term don't really show that slowing down either, and neither do the CapEx plans for the cloud companies in 2025.
Brian, I'm curious too, U.S. export controls. What's the possible ramifications, the impact, Brian, for NVIDIA?
It doesn't look like much based on this revenue. I mean, we'll be interested in hearing more on the call. I suppose, if we were trying to make a bet on, guidance and whether it'd be down significantly or not, you wonder if there would have been a dent in sovereign AI spending with the sovereign governments based on controls. I would say medium to long term, we're not expecting a lot of revenue for NVIDIA from China. Now, maybe they continue to sell H20s and equivalents going forward, and it's a piece of the pie. But to us, the build out the future of AI, there's a lot of potential risks and rewards over the next couple of years for NVIDIA. China is not something we're counting on as far as a big bounce back, as far as a repeal of any regulations or anything like that. We think of NVIDIA very much as a U.S. story, and to the extent they sell anything from China, that's good news in the near term. And the sovereign governments that may not be allowed to sell into them. I still think of it more as a hyperscaler story.
And Brian, you've got a $130 fair value estimate for the stock. That's right around where it is right now. Why don't you think that there is more upside in the short term?
Yeah, so I would say there's upside in the short term based on the high CapEx spending of the hyperscalers and NVIDIA's supply constrained and selling everything they can for 2025. And then I'm also quite bullish on AI as a technology at large. So those are very much the rewards for any NVIDIA investor, and nothing I just said is a surprise in any way. But the risks, as we saw, whether it was the DeepSeek sell-off, the use of custom in-house chips, whether this spending will continue, at what point do the hyperscalers optimize spending? If you think medium to long term, what's the growth trajectory look like? And so at 130, again, going into the call, we'll update our numbers later, but at a 130 fair value estimate, we think that balances the potential high rewards of AI, but also the potential risks of slower CapEx spending, growth not coming to fruition, more use of in-house chips. I mean, the way we think about the hyperscalers is they are completely reliant on NVIDIA today, and they have all the incentive in the world to not be reliant on them in the future. And we'll see when that crosses over. But that's why I guess I'm relatively cautious on valuation at this point.
Brian, great to have you on the show today. Thanks so much for joining us.
Thank you.
Coming up, we've got the numbers. Now let's hear from NVIDIA. We're going to bring you the earnings call on the other side of the break. Stick around. More of Yahoo Finance's special coverage of NVIDIA's earnings. That's coming right up.
NVIDIA reporting fourth quarter earnings moments ago. Now all eyes and ears focused on the earnings call. Joining us again, Yahoo Finance tech editor Dan Howley. So what do we know? What do we want to know from the call, Dan?
Yeah, Julie, I think what we want to hear is more about Blackwell. Obviously, in the CFO commentary, Colette Crescent said that it was the largest or fastest ramp in history for their different AI cards. Obviously, Hopper was the prior generation, and they saw the explosion happen around there of the kind of AI boom. But this is the first card that's really gone out, or technology that's gone out in the midst of it. So it makes sense that would happen. But we want to know more about where that they see that going in the coming quarters, where they see it going in the back half of 2025. Obviously, there was a lot of questions as to what that looks like in the first few quarters of 2025. We got their guidance, so obviously that came in ahead of expectations. Now, what does that mean going forward past that? I think that's one of the things we're going to look for. Jensen Wong had kind of alluded to the DeepSeek drama, whether the fact that DeepSeek was able to train on NVIDIA's H20s rather than Blackwell cards and get good results out of their own AI models versus US firms that have AI models but used the high-end NVIDIA chips. And he had basically said in a statement, more or less, that the more compute that companies have, meaning the higher-end cards they have, the better long-thinking AI models respond, and that's essentially what DeepSeek does, is it uses long thinking. So that's something that he has kind of hit on since the whole kind of DeepSeek explosion happened at the beginning of, I believe it was, or in December. And so that's him kind of, I think, just referring to that. This is their first call since that happened. And so, we saw other tech companies say this is a good thing. This is NVIDIA saying that as well, just not as specifically. Hopefully we get more of that on the call. And then, honestly, any kind of commentary we can get with regards to export controls or tariffs, I think those are going to be very hot topics that analysts are going to want to know about.
All right, thank you, Dan. We'll check in again soon, my friend. Now let's bring in Corey Johnson for his thoughts ahead of the call. Corey, my friend, I'm looking at the stock after hours. We've bounced around here. Now we're up about more than 2%. On this call, Corey, let's say you had the chance to ask Jensen Wong a question or two. What would be top of mind for you?
Not the leather jacket. I can't ask about when that started. I think that what's really interesting here is what's going on in the data center and what does it mean for future growth in the data center. Does this continue to be the super high margin, again, 70% margins and gross margins are just fantastic for the semiconductor business, better than almost any company has ever done over in this kind of size. It's just amazing. But can that continue? What does it mean for the future of training versus inference? And is inference the place where other competitors are going to find some room to elbow into this fantastic market that NVIDIA has really captured? This is just a great quarter for this company, but we're still a lot of questions about what the future has for us in the near term, let alone the far term, let alone 5 years, Brian.
Yeah, exactly. I mean, it's just incredible to me when we talk about the numbers for this $3 trillion company, that it is seeing its revenue grow 93% year over year, which is about 20 percentage points more than estimated. But I guess as we keep talking about it, it's not, we're sort of like, okay, great. So they did another great big quarter, right? It's the market, as we know, is a what have you done for me lately machine. And I guess the question is around what will wow traders enough to continue to bid it up at the same velocity?
Well, traders are going to trade. But I think that when we look at what the value that this company is creating, as you mentioned, the 93% data center growth on a year-over-year basis, and these data center announcements are just stunning. I mean, I was going through Meta's announcements, and they've got this wonderful page that shows the different data centers that they've built, and the $1 billion Altoona, Iowa data center that Meta is building with lots of NVIDIA chips. That there are so many of these projects happening all around the world, and the beneficiaries, I'm trying to figure out who's doing the optical networking in these, and where's the componentry coming from, and what's the power usage going to be like, and what are they doing for liquid cooling and making these data centers sort of functionally work. But the commonality in all this stuff is spending on NVIDIA, and that is not slowing down. It's still growing at jaw-dropping, double-digit pace. It's really amazing what's happening with NVIDIA and these numbers. We should take a moment and just appreciate what's happening right now in front of us, because NVIDIA quarter is just great.
Corey, as you look at the competitive landscape, any actual competitive threats for Jensen Wong in the near to intermediate term here?
Yeah, absolutely. AMD's there. Intel's dead but not out, talking about some things that actually might challenge NVIDIA a couple of years from now. And a couple of years from now isn't that far away. And so I think there's real concern about competition here because this is a really big market and there's lots of money to be made here. And you can see the competitors coming out in spades looking for that.
Well, I guess we're awaiting the call starting here, Corey. As we, see, I'm sure we'll see more volatility
and
here.
I'm waiting for the 10K, which they've typically put out a day or two afterwards, but sometimes they can surprise us.
What's in the 10K that you'll be looking for?
Well, I don't know. I look for surprises. I look for changes. Those little word changes that might mean some new risk introduced or something new about. And there's a lot of questions about what's going on with China, with export controls. It certainly is news coming out of the White House, but I think it's one of the rare places where we've seen sort of bipartisan agreement that China is a threat when it comes to artificial intelligence, and that we've heard some reports that the Trump administration may be looking at further export controls. As this technology evolves, the risk tends to shift around, and Washington has never done well, and the EU has never done well at adopting new risk policies at the rate that the technology changes. Little surprise there. But I think that we do have a sense coming out of Washington that this is a concern that both parties have, and what that's going to mean for the sales of companies like NVIDIA and their ability to sell, and ASML and Taiwan Semiconductor, and their ability to sell into China. They want to sell into China. They want to provide their products everywhere they possibly can. Their incentives are different than maybe the incentives of the rest of the national security infrastructure, if you will. And so the effect that will have on sales and growth is significant. Again, I'm looking for numbers out of Singapore. We'll probably get that in the conference call presentation. It's not in the as well as the 10K whenever that comes out. But we'll see in the conference call presentation what's happening with percentage of sales into China, percentage of sales into Singapore, and how that's rising, and then what that might be. One of your earlier guests talked about DeepSeek probably using a lot of NVIDIA chips somewhere. We'd like to see some information about that.
Corey, stick around. We're going to hear from you again shortly after the call. And speaking of, let's get out to the fourth quarter earnings call right now.
2025 revenue was $130.5 billion, up 114% from the prior year. Let's start with data center. Data center revenue for fiscal 2025 was $115.2 billion, more than doubling from the prior year. In the fourth quarter, data center revenue of $35.6 billion was a record, up 16% sequentially and 93% year on year, as the Blackwell ramp commenced and Hopper 200 continued sequential growth. In Q4, Blackwell sales exceeded our expectations. We delivered $11 billion of Blackwell revenue to meet strong demand. This is the fastest product ramp in our company's history, unprecedented in its speed and scale. Blackwell production is in full gear across multiple configurations, and we are increasing supply quickly to meet expanding customer adoption. Our Q4 data center compute revenue jumped 18% sequentially and over 2x year on year. Customers are racing to scale infrastructure to train the next generation of cutting-edge models and unlock the next level of AI capabilities. With Blackwell, it will be common for these clusters to start with 100,000 GPUs or more. Shipments have already started for multiple infrastructures of this size. Post-training and model customization are fueling demand for NVIDIA infrastructure and software as developers and enterprises leverage techniques such as fine-tuning, reinforcement learning, and distillation to tailor models for domain-specific use cases. Hugging Face alone hosts over 90,000 derivatives created from the Llama Foundation model. The scale of post-training and model customization is massive and can collectively demand orders of magnitude more compute than pre-training. Our inference demand is accelerating, driven by test time scaling and new reasoning models like OpenAI's O3, DeepSeek R1, and Grok 3. Long-thinking reasoning AI can require 100x more compute per task compared to one-shot inferences. Blackwell was architected for reasoning AI inference. Blackwell supercharges reasoning AI models with up to 25x higher token throughput and 20x lower cost versus Hopper 100. It is revolutionary. Transformer Engine is built for LLM and mixture of experts inference. And its NVLink domain delivers 14x the throughput of PCIe Gen 5, ensuring the response time, throughput, and cost efficiency needed to tackle the growing complexity of inference at scale. Companies across industries are tapping into NVIDIA's full stack inference platform to boost performance and slash costs. Snap tripled inference throughput and cut costs by 66%, using NVIDIA TensorRT for its screenshot feature. Perplexity sees 435 million monthly queries and reduced its inference costs 3x with NVIDIA Triton Inference Server and TensorRT LLM. Microsoft Bing achieved a 5x speedup and major TCO savings for visual search across billions of images with NVIDIA TensorRT and acceleration libraries. Blackwell has great demand for inference. Many of the early GB200 deployments are earmarked for inference, a first for a new architecture. Blackwell addresses the entire AI market from pre-training, post-training to inference across clouds to on-premise to enterprise. CUDA's programmable architecture accelerates every AI model and over 4,400 applications, ensuring large infrastructure investments against obsolescence in rapidly evolving markets. Our performance and pace of innovation is unmatched. We're driven to a 200x reduction in inference costs in just the last 2 years. We deliver the lowest TCO and the highest ROI. And full stack optimizations for NVIDIA and our large ecosystem, including 5.9 million developers, continuously improve our customers' economics. In Q4, large CSPs represented about half of our data center revenue, and these sales increased nearly 2x year on year. Large CSPs were some of the first to stand up Blackwell, with Azure, GCP, AWS, and OCI bringing GB200 systems to cloud regions around the world to meet surging customer demand for AI. Regional clouds hosting NVIDIA GPUs increased as a percentage of data center revenue, reflecting continued AI factory buildouts globally and rapidly rising demand for AI reasoning models and agents. We've launched a 100,000 GB200 cluster-based instance with NVLink Switch and Quantum 2 InfiniBand. Consumer internet revenue grew 3x year on year, driven by an expanding set of generative AI and deep learning use cases. These include recommender systems, vision language understanding, synthetic data generation search, and agentic AI. For example, xAI is adopting the GB200 to train and inference its next generation of Grok AI models. Meta's cutting-edge Andromeda advertising engine runs on NVIDIA's Grace Hopper superchip, serving vast quantities of ads across Instagram, Facebook applications. Andromeda harnesses Grace Hopper's fast interconnect and large memory to boost inference throughput by 3x, enhance ad personalization, and deliver meaningful jumps in monetization and ROI. Enterprise revenue increased nearly 2x year on the accelerating demand for model fine-tuning, RAG, and agentic AI workflows, and GPU accelerated data processing. We introduced NVIDIA Llama Nematron model family NIMs to help developers create and deploy AI agents across a range of applications, including customer support, fraud detection, and product supply chain and inventory management. Leading AI agent platform providers, including SAP and ServiceNow, are among the first to use new models. Healthcare leaders IQVIA, Illumina, and Mayo Clinic, as well as ARC Institute, are using NVIDIA AI to speed drug discovery, enhance genomic research, and pioneer advanced healthcare services with generative and agentic AI. As AI expands beyond the digital world, NVIDIA infrastructure and software platforms are increasingly being adopted to power robotics and physical AI development. One of the early and largest robotics applications in autonomous vehicles, where virtually every AV company is developing on NVIDIA in the data center, the car, or both. NVIDIA's automotive vertical revenue is expected to grow to approximately $5 billion this fiscal year. At CES, Hyundai Motor Group announced it is adopting NVIDIA technologies to accelerate AV and robotics development and smart factory initiatives. Vision transformers, self-supervised learning, multimodal sensor fusion, and high-fidelity simulation are driving breakthroughs in AV development. And we announced the NVIDIA Cosmo World Foundation Model Platform. Just as language foundation models have revolutionized language AI, Cosmos is a physical AI to revolutionize robotics. Leading robotics and automotive companies, including ride-sharing giant Uber, are among the first to adopt the platform. From a geographic perspective, sequential growth in our data center revenue was strongest in the U.S., driven by the initial ramp of Blackwell. Countries across the globe are building their AI ecosystems, and demand for compute infrastructure is surging. France's 200 billion euro AI investment and the EU's 200 billion euro Invest AI initiative offer a glimpse into the build-out to set redefined global AI infrastructure in the coming years. Now, as a percentage of total data center revenue, data center sales in China remained well below levels seen on the onset of export controls. Absent any change in regulations, we believe that China's shipments will remain roughly at the current percentage. The market in China for data center solutions remains very competitive. We will continue to comply with export controls while serving our customers. Networking revenue declined 3% sequentially. Our networking attached to GPU compute systems is robust at over 75%. We are transitioning from small NVLink 8 with InfiniBand to large NVLink 72 with Spectrum X. Spectrum X and NVLink switch revenue increased and represents a major new growth sector. We expect networking to return to growth in Q1. AI requires a new class of networking. NVIDIA offers NVLink switch systems for HPC supercomputers and Spectrum X for Ethernet environments. Spectrum X enhances the Ethernet for AI computing and has been a huge success. Microsoft Azure, OCI, CoreWeave, and others are building large AI factories with Spectrum X. The first Stargate data centers will use Spectrum X. Yesterday, Cisco announced integrating Spectrum X into their networking portfolio to help enterprises build AI infrastructure. With its large enterprise footprint and global reach, Cisco will bring NVIDIA Ethernet to every industry. Now moving to gaming and AI PCs. Gaming revenue of $2.5 billion decreased 22% sequentially and 11% year-on-year. Full-year revenue of $11.4 billion increased 9% year-on-year, and demand remained strong throughout the holiday. However, Q4 shipments were impacted by supply constraints. We expect strong sequential growth in Q1 as supply increases. The new GeForce RTX 50 series desktop and laptop GPUs are here. Built for gamers, creators, and developers, they fuse AI and graphics, redefining visual computing. Powered by the Blackwell architecture, 5th generation Tensor cores, and 4th generation RT cores, and featuring up to 3,400 AI TOPS. These GPUs deliver a 2x performance leap and new AI-driven rendering, including neural shaders, digital human technologies, geometry, and lighting. The new DLSS 4 boosts frame rates up to 8x with AI-driven frame generation, turning one rendered frame into 3. It also features the industry's first real-time application of transformer models, packing 2x more parameters and 4x the compute for unprecedented visual fidelity. We also announced a wave of GeForce Blackwell laptop GPUs with new NVIDIA Max-Q technology that extends battery life by up to an incredible 40%. These laptops will be available starting in March from the world's top manufacturers. Moving to our professional visualization business. Revenue of $511 million was up 5% sequentially and 10% year-on-year. Full year revenue of $1.9 billion increased 21% year-on-year. Key industry verticals driving demand include automotive and healthcare. NVIDIA technologies and generative AI are reshaping design, engineering, and simulation workloads. Increasingly, these technologies are being leveraged in leading software platforms from Ansys, Cadence, and Siemens, fueling demand for NVIDIA RTX workstations. Now moving to automotive. Revenue was a record $570 million, up 27% sequentially and up 103% year-on-year. Full year revenue of $1.7 billion increased 55% year-on-year. Strong growth was driven by the continued ramp in autonomous vehicles, including cars and robotaxis. At CES, we announced Toyota, the world's largest automaker, will build its next generation vehicles on NVIDIA Orin, running the safety-certified NVIDIA Drive OS. We announced Aurora and Continental will deploy driverless trucks at scale powered by NVIDIA Drive Thor. Finally, our end-to-end autonomous vehicle platform, NVIDIA Drive Hyperion, has passed industry safety assessments by TÜV and TÜV Rheinland, two of the industry's foremost authorities for automotive-grade safety and cybersecurity. NVIDIA is the first AV platform to receive a comprehensive set of third-party assessments. Okay, moving to the rest of the P&L. GAAP gross margins was 73%, and non-GAAP gross margins was 73.5%, down sequentially as expected with our first deliveries of the Blackwell architecture. As discussed last quarter, Blackwell is a customizable AI infrastructure with several different types of NVIDIA build chips, multiple networking options, and for air and liquid-cooled data center. We exceeded our expectations in Q4 in ramping Blackwell, increasing system availability, providing several configurations to our customers. As Blackwell ramps, we low 70s. We are focused on expediting the manufacturing of Blackwell systems to meet strong customer demand as they race to build out Blackwell infrastructure. The cost and gross margin will improve and return to the mid-70s late this fiscal year. And non-GAAP operating expenses were 11%, reflecting higher engineering development costs and higher compute and infrastructure costs for new product introductions. In Q4, we returned $8.1 billion to shareholders in the form of share repurchases and cash dividends. Let me turn to the outlook in the first quarter. Total revenue is expected to be $43 billion, plus or minus 2%. Continuing with its strong demand, we expect a significant ramp of Blackwell in Q1. We expect sequential data center. We expect sequential growth from both compute and networking. GAAP and non-GAAP gross margins are expected to be 70.6% and 71%, respectively, plus or minus 50 basis points. GAAP and non-GAAP operating expenses are expected to be approximately $5.2 billion and $3.6 billion, respectively. We expect full year, fiscal year 26 operating expenses to be in the mid-30s. GAAP and non-GAAP other incoming expenses are expected to be an income of losses from non-marketable and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 17% plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website, including a new financial information AI agent. In closing, let me highlight upcoming events for the financial community. We will be at the TD Cowen Healthcare Conference in Boston on March 3rd, and at the Morgan Stanley Technology, Media, and Telecom Conference in San Francisco on March 5th. Please join us for our annual GTC conference starting Monday, March 17th in San Jose, California. Jensen will deliver a news-packed keynote on March 18th, and we will host a Q&A session for our financial analysts the next day, March 19th. We look forward to seeing you at these events. Our earnings call to discuss the results for our first quarter of fiscal 2026 is scheduled for May 28th, 2025. We are going to open up the call, operator, to questions. If you could start that, that would be great.
Thank you. At this time, I would like to remind everyone.
We're just hearing from NVIDIA's Chief Financial Officer, Colette Kress there. A couple of comments she talked about. She gave some of the forecasts, some more detail on Blackwell, on the ramp up that they are undergoing in terms of production there, talking about the first quarter we'll see a significant ramp of Blackwell and manufacturing of that chip. For more on the latest from NVIDIA's earnings report and call, we're bringing back Corey Johnson, Chief Market Strategist at Epistrophe Capital Research, host of the Drill Down podcast. I imagine Colette probably wasn't listening to our conversation before the call, but she seemed to be speaking directly to one of the points that we spoke about just a few moments ago, and that has to do with inference. And this is something that's not new, right? Yeah. NVIDIA has maintained all along that its Blackwell chips were good for not just training, but for inference. But she really hammered home that point again. She said Blackwell has great demand for inference and talked about the continuing need for and demand for companies who are using it for all kinds of applications. I'm just curious, did you clock that as well, Corey? And what did you think of that commentary?
So NVIDIA has, and Jensen Wong in particular, has they're taking great pains to talk about other markets that are out there, whether it's automotive, gaming, which they used to talk about and still talk about. They talk about robots. They've made some investments there. They've had robots out of their NVIDIA GTC trying to show off all these other places that AI will be used and the places that they can sell chips into. They want it like all the companies in Silicon Valley that surround me, all the startups that surround me here in San Francisco. They want to tell us that the TAM, the total addressable market, is bigger than what we can see. And it indeed may be. But I think that that's not very different from them, from what we've heard in the past for this company. They want us to think that the TAM is huge. One of our challenges of investors is not to imagine how great things can be, but also to imagine how bad things can be in the future. So while she was talking, they actually filed their 10K during the call, and I was rapidly going through there looking for changes and risks factors, and there aren't a lot of huge changes. I will point to one thing that isn't a big change. It's a change from last year's 10K, but not a change from prior reports that we've seen, which is they mentioned that these Singapore sales that I brought up, I only bring it up because I brought it up before, aren't necessarily sales of chips physically into Singapore, that they actually told us that that's single digits in the quarter, but they reported revenues attributed to Singapore are in double digits. So we'll make of that what we will as it relates to export controls and other places in the region trying to find a place that they can get the chips, at least attribute their bills to. There's a lot of talk in the 10K, new risks entered about export controls and the effects of export controls, including something called AI diffusion IFR and designation of China and 150 companies designated as tier 2. Sorry, I'm reading from the 10K at this moment. And so the concerns that this could actually dampen sales in the future for NVIDIA. Now, this in the context of the actual numbers. So the actual numbers that we can see in this 10K, and again, the actual, at least I was looking on the website and didn't see an update of the presentation materials while the CFO was talking here. But we can see in the numbers, they give us the annual numbers. If you strip out what they did earlier in the year, you can figure out what the quarterly numbers are. They saw revenues into China, in spite of all these export controls. Again, a year ago in the fourth quarter, sales into China were under $2 billion. In this quarter, they were over $6 billion. So fantastic growth in sales to China, despite these export controls. I think that's an area of concern and something to watch for when you want to imagine and pencil out the growth in NVIDIA in the future.
Corey, DeepSeek is going to be front and center on this call. I would imagine, they're going to get plenty of questions on that. What do you think Jensen Wong has to say to sort of allay any jitters about that?
I've been covering semiconductors for decades, and this cost of semiconductors drops by half about every other year. And yet, the usage of semiconductors has gone through the roof every single year. So I think that he'll probably say something of that sort, that more efficient AI models means that you do more with AI, and that's nothing but good for NVIDIA, and I think that's exactly right.
Corey, we are going to check back in with you in just a few minutes, my friend. Stick around. NVIDIA, meanwhile, having its earnings call as we speak, and Yahoo Finance tech editor Dan Howell, he's listening in to the call. Dan, what are you hearing so far?
Yeah, Josh, a few things that we want to point out. First, it seems like Jensen Wong's basically touching on all of the concerns that investors have raised over the past few months with regards to NVIDIA's performance, whether that's DeepSeek or cloud service providers, things along those lines. We actually have a quote from Colette Kress during the call where she references inference demand. We were just speaking with that, as well as DeepSeek. Have a listen.
Our inference demand is accelerating, driven by test time scaling and new reasoning models like OpenAI's O3, DeepSeek R1, and Grok 3. Long-thinking reasoning AI can require 100x more compute.
And so that's one of the points that a lot of investors had brought up was, that when DeepSeek came out, it used these lower powered chips. Does that mean then that Microsoft's, the Amazons of the world don't need to buy the more expensive chips? Well, according to NVIDIA and Colette Kress, CFO, no. There was also talk of the companies that are adopting some of the chips. We actually have a quote there on what XAI and Meta are doing.
XAI is adopting the GB200 to train and inference its next generation of Grok AI models. Meta's cutting-edge Andromeda advertising engine runs on NVIDIA's Grace Hopper superchip.
And then they also discussed where they're seeing the most revenue. Obviously, the U.S. is its largest market, and they said that they'll continue to see sequential growth there. They did also touch on China, and obviously, we think about that. You think about the export controls there that are the reason why DeepSeek had to use the H20 chip that kind of raised all those concerns. Well, they say that they expect that revenue will remain where it is, which is below levels prior to the onset of export controls, and that's just to be expected. We know President Trump obviously discussed potentially adding more export controls, so we'll see what happens there. And then finally, they talked about gross margin, and they said how in the coming quarters, the next quarter, they expect to see gross margins in the low 70s. That's part of the Blackwell ramp, but then at the back end of the year, they expect that to return to the mid 70s at some point.
Dan, I know we don't talk about it as much, and for good reason, but what about the gaming business, Dan, the gaming division? What are we seeing there?
Yeah, I mean, gaming took a hit, obviously, in this quarter just because of the issues related to the ramp of their Blackwell-centric cards, those 50 RTX 50 series cards. And so they did say that they expect that to return to growth in Q1. It's just a matter of getting those cards into consumers' hands. And, you know, look, I'm the kind of guy who would buy a $2,000 graphics card and then regret it immediately. But still, even if I wanted to, I can't get my hands on it. They sell out right away. So it's going to be an ongoing problem for NVIDIA with regards to the gaming business. It would have been a much larger problem, you know, couple of months ago, if not for the fact that the data center is so much larger than gaming now.
Dan, thank you so much. We'll be checking in with you again. Appreciate it. Stick around. More of Yahoo Finance's special coverage of NVIDIA's earnings coming right up.
NVIDIA are delivering another solid quarter, but investors keeping a close eye on commentary on China and export controls. And joining us now is Riva Gujan, Rhodium Group Director. Riva, it is good to see you. So, you know, NVIDIA reports there were a lot of questions about U.S. export controls, how they would affect the company's business. Frankly, when you look at the company's forecast, top line is better than what the street was looking for. I am curious, though, how you think about U.S. chip controls going forward. As a policy tool, as a lever, how do you see them playing out and developing from here?
Well, to answer that question, we have to look at what the DeepSeek disruptor actually did, right? And DeepSeek was a massive catalyst for both open source AI development, but also the deployment of efficient reasoning models. And so what DeepSeek did was it basically just squeezed every bit of compute that it could and did a lot of really clever algorithmic innovations to optimize what actually OpenAI had done just 4 months prior to the DeepSeek release and creating this new paradigm in reinforcement learning with its O1 model. So that then just raises a question, right? That was a really short timeline where there was just 4 months between a very expensive American frontier model paradigm shift in reasoning, and then we had the release of a budget Chinese open source reasoning model, which then raises the question of, okay, how does the US then protect massive upfront investments in frontier model development? So to the issue of controls, right? Okay, chip controls are already in play. Those are going to likely be expanded. So there's a lot of speculation over how many H100s and H800 NVIDIA chips DeepSeek actually had access to in the past couple of years where those chip controls were ratcheting up. Those are now restricted. But now the question is those below threshold chips that NVIDIA designed to be compliant with US export controls, but which can still be used toward this type of model development. So that scope expansion is kind of like the most obvious area, I think, where you're going to see chip controls go. But there's another massive area here too, which is U.S. strategy is trying to throttle, essentially, Chinese chip production, throw sand in the gears so that SMIC, China's main foundry, runs into huge challenges in trying to produce at scale a bunch of these AI chips that Huawei's HiSilicon is designing, because that's China's best bet in keeping up with this AI race now that it's already made this big open source play in model development. The key thing there is that the servicing of manufacturing equipment in the foundry, that is an area where the U.S. just does not have partner alignment. So basically, ASML and Tokyo Electron engineers are still kind of servicing equipment there, and the U.S. wants that to stop. So that is also another area to watch next, where I think you would see the Trump administration probably take, let's say, a less polite, a less accommodating stance toward partners on this really critical export control issue.
So obviously, some of this, the first item you mentioned, more of a risk to the likes of NVIDIA than the second, right? Because they don't use SMIC, they use Taiwan Semiconductor. But I guess the sort of bigger question beyond NVIDIA is, will it work, right? Yeah. Because we've seen the limited export controls. If the goal was to throttle the industry and then you have DeepSeek, that wasn't probably the outcome that was desired, right? So does further throttling achieve that outcome, or does it make the Chinese industry more creative?
Well, here's the thing, right? The NVIDIA earnings call really articulated this well, that compute still really matters, right? So what DeepSeek showed with inference scaling, that's off to the races, right? But that's happening in parallel to the training paradigm, which is, that we're going to have frontier model developers building bigger and better models, right? So compute still matters. So access to the bleeding edge technology is still going to matter as well, right? China's not going to have access to Blackwell architecture. It doesn't have access to EUV lithography to build cutting edge chips. It's going to do whatever it can to produce as many chips right now it's at a 7 nanometer class process node capability. And there's a question, is that going to be enough to meet all this rapidly growing demand just in the Chinese market itself? And so that's also where US strategy is basically saying, look, we accept that US tech controls are going to accelerate Chinese tech indigenization. That's a given, that's happening. But the US wants to make sure that China's left high and dry here, that there aren't foreign suppliers that are helping China in its self-reliance aims. And so that's where there was a really interesting rule passed in the final days of the Biden administration, which was it was called the Foreign Foundry Rule. And it basically restricts Chinese chip makers from relying on TSMC to produce advanced node chips, basically because of these really stringent due diligence requirements. And that puts the onus then on SMIC to be able to produce in much larger volumes. And that is the ultimate test here. Chinese chip production is going to continue to optimize. There are going to be these engineering efficiencies that we're going to see come through. But it's just a question of how much of a gap can you create in the US by this migration to bleeding edge technology while China's doing everything it can with the constraints that it has.
Reva, I'm curious, if we not only maintain but expand those export controls, how would you expect China to react to that?
Not well, but I think it expects it, right? And it's preparing it. And this is exactly why China is doubling down on open source development. That is its lifeline. It can't compete with closed weight model developers like we have in the US because it just doesn't have that access to compute, right? And so, as we look at the nature of U.S. export controls, it's going to be really interesting to see in chip controls, right? When we get into restrictions around cloud service providers and how stringent do those get, access to models via API, via cloud. And then when you get into open source, if you start restricting model weights for a company like Meta with its Llama model, you would basically be ceding the ground to China in this open source competition, right? So lots of issues for the U.S. and where to go next, but from China's perspective, they already see that those chip controls are tightening. They're in an increasingly existential position over that. But the efficacy of export controls is what matters here. If the U.S. gets alignment from partners on things like servicing, like I mentioned earlier, that's going to hurt a lot more. And that's where we need to watch Chinese retaliation, not just against the U.S., but also to key partners like Japan and the Netherlands.
Well, and also, I got to throw a Taiwan question in there because I've seen some reporting that Taiwan is watching the U.S.'s sort of retreat of support or pullback in support from Ukraine with alarm, and raises concerns about what it means for U.S. support of Taiwan. So I'm curious how you're thinking. I mean, that's a separate issue, obviously, but I'm curious how you're thinking about that.
It's separate, but it's totally connected at the same time, right? Because at the same time, you have, on the one hand, Trump transactionalism in play with Taiwan, trying to bring more TSMC investment to the United States, through a number of sort of coercive threats like tariffs and other things. And then at the same time, China is feeling more and more cornered by these technology controls, which are bound to tighten further. So there's a question, right, of also how Beijing is looking at the diplomacy over Ukraine and saying, okay, if this is an American president that is really keen on getting a quick deal, and you can basically diplomatically reengage and get some, business, reengagement out of a quick peace deal, then is it worth a short and sharp conflict? For example, imposing a customs quarantine that asserts China's claims to Taiwan in ways that, it can basically consolidate some territorial gains and come out of this okay at the end of a Trump administration. That's a short window, but I imagine that's a lot of what Beijing is watching and also trying to assess to what degree is U.S. plays on Ukraine actually going to result in a pivot to the Indo-Pacific security and whether that's actually going to result in real security guarantees or not. So, tech controls can push China into confrontation on Taiwan, where it could leverage a security crisis. But that Ukraine variable is also going to be really significant in informing Beijing's calculus. But at the same time, Trump transactionalism can actually create immense changes to semiconductor supply chains, even short of a real crisis over Taiwan.
Riva, this is all really fascinating. I guess if you put it all together and you're an NVIDIA investor and you're trying to figure out how to game all of this out, obviously there are so many unknown variables. Do you just kind of put it to the side now because NVIDIA has limited its China exposure already to some degree?
Well, no, you actually have to dive in deeper and you have to look at this very methodically in terms of scenarios where you have to look at the trajectory of U.S.-led technology controls, the degree of partner alignment that the U.S. is able to coerce basically at this point. You have to look at China's technological and economic performance. Is it able to make a big industrial AI breakthrough? Is it able to produce the AI chips it needs to keep pace with the US in AI competition? And then lastly, you need to look at the Taiwan variable, which, as we were just talking about, is also a function of what happens on the European continent with Ukraine. So these all intersect in this really fascinating way, and you have to be able to see how that picture is moving basically week by week.
Riva, thank you so much for your perspective on this really, really helpful stuff.
Thank you.
Stick around, we've got more of Yahoo Finance's special coverage of NVIDIA's earnings. Up next, a closer look at the technicals of NVIDIA's shares and what we can learn from the options market. NVIDIA topping estimates on the top and bottom line for the fourth quarter and providing an upbeat outlook. The shares have been bouncing around. Right now, they're up almost 2%. The options market was expecting NVIDIA to move 10% in either direction on earnings. That's what it was pricing in. Here with a closer look at sentiment on NVIDIA, we've got Jessica Inskip, stockbrokers.com, Director of Investor Research. Jessica, it's good to see you here. So, you know, we've really had the shares kind of feeling indecisive, although settling a little more solidly into the green during the call here. How is options activity leading up to the earnings sort of playing out now that we've got them?
Well, I think it's so interesting. The options market was actually very correct if you take a deeper dive. So when we're looking at the implied move, which is something we utilize, that's just looking at almost a similar calculation to the VIX. That's just the uncertainty that's priced there. If we're to pull about a year ago, we actually have a 75% increase in total options volume from this time last year, which I think is so interesting. But when I'm pulling those moves or seeing where there's positioning, I want to understand, okay, if we are long and we're bullish, because options can also be sold and be bullish or sold and be bearish, we have to look a lot in the detail, and it is only ever so slightly bullish, and which is exactly what we're seeing after hours.
Give me the trade idea, Jessica.
Yeah, so what's interesting in the way that I like to play this, options, because of uncertainty, are priced with more than just the underlying security. It's implied volatility. Implied volatility is amplified around earnings. So what we would do is create a short iron condor. I know that sounds complex, but it's a volatility play, which is an extrinsic value decay, which happens once uncertainty is removed, which is earnings expectations. So what we do is we take that implied move. NVIDIA closed around the 131-ish range. So we go 10% up, which is that move, 10% down. We essentially create this range where we have our credit call spread on the top and our credit put spread on the bottom. A credit put spread is profitable as long as you close at or above the strike, and a bear puts or a bear call spread as long as you close at or below the strike. So essentially what NVIDIA is doing right now, as long as it stays within that range, which is 118 to 145, 10% up or down, you capture this credit, have very minimal risk. It's so skewed in your favor around this time frame, and are profitable capturing that full credit.
Well, and Jessica, remind me, what's the time frame for that?
So you could do this in a lot of time frames. I prefer around 30 to 45 days, because whenever we're selling options, because options have that time premium associated with it, I also want to optimize that as well. And a really great example of this type of normal trade, if we were to do this tomorrow or not around earnings, we look at a risk to reward ratio, usually of a 3 to 1 or a 1 to 3, meaning if I capture a credit, I'm going to end up losing about 3 times because of the probabilities. In this case, it's a 1 to 1. That's what I mean by risk reward is so skewed in your favor. It's such a complex trade, but all we're doing is creating a range, selecting about 30 days out to capture theta decay. You get a credit of about $500, but your maximum loss is also $500. Whereas in a normal environment, it would be your maximum gain is 500, max loss about 1,500. So that's what I mean by skew risk reward heavily in your favor because of amplified options. People are betting on direction. In this case, you're choosing the highest direction and assuming that it's going to stay within that range, which is what's happening right now.
Jessica, I'm curious, when you look at the charts, what do the technicals tell you right now for NVIDIA?
Yeah, that's so important, and I think it goes into the overall market. So when I look at the charts, I love to look at a longer period, and I use weekly intervals. And I'm looking at the 13, 26, and 40 weekly moving averages. The reason for that is we're looking at the market quarterly. 13 weeks is roughly about 1 quarter, 26 to 43. NVIDIA is actually sitting in between those weekly moving averages, so 1 quarter worth of prices and 3 quarters worth of prices, which means this is a decisive moment for NVIDIA. The technicals are saying we need a catalyst of some sort to get us out of this range bound that we've found, and the moving averages are certainly mirroring that. So actually, tomorrow, once we get some activity, I would love to see a weekly close above 135. That will put us above the 13 weekly moving average and put us back into a better position to rally and hit new highs.
Jessica, appreciate your time in the trade. Thanks for joining us.
Thank you.
Stick around. More of Yahoo Finance's special coverage of NVIDIA's earnings coming right up.
Blackwell Ultra is second half. As you know, the first Blackwell was, we had a hiccup that probably cost us a couple of months. We're fully recovered, of course. The team did an amazing job recovering, and all of our supply chain partners and just so many people helped us recover at the speed of light. And so now we've successfully ramped production of Blackwell. But that doesn't stop the next train. The next train is, is on an annual rhythm, and Blackwell Ultra with new networking, new memories, and of course new processors, and all of that is coming online.
That was NVIDIA CEO Jensen Wong on the company's latest earnings call. For more on the latest from the report and the call, Corey Johnson back with us, Chief Market Strategist at Epistrophe Capital Research, host of the Drill Down podcast. And Corey, the commentary on Ultra really interesting there because, you know, part of the concern and the question on the call was about whether Ultra was going to cannibalize demand for Ultra because for Blackwell, because they keep coming out with these new chips so quickly here. And Wong said that Ultra is going to come in the second half, and you can kind of use it. It sounds like you can kind of use it interchangeably with Blackwell itself. But the product cycles here are pretty interesting.
And we'll find a lot more at GTC in another few weeks or so. But you know, what we know about the development of these products is that there are these iterative changes and there's really big changes. Blackwell was a big change. It was a big change in process technology in particular, and the way that these chips and chiplets around it are made was extraordinarily complicated. Most complicated semiconductor probably ever manufactured. So it makes sense that there were some problems and hiccups along the way. The other thing we know about the history of semiconductors is that customers always overorder during boom times because they can't get enough, and they promise they're good for the orders. And then when the boom slows down or a competitive product arrives, there's oversupply. And so, you know, it has always been thus with semiconductors, and we continue to watch for that. But right now is boom time, and when we see these announcements over and over again of hundreds of billions of dollars to be spent to building data centers, it's good news for NVIDIA. The last note I'll leave is that I was also looking at the earnings from Synopsys at the same time, a company that has software to help semiconductor companies and semiconductor users design new semiconductors. And they saw 11% rise in revenues on a year-over-year basis, 15% for the year, showing us that there is continued strong double-digit demand to design new stuff using all these fantastic semiconductors, a really bullish underpinning of this industry that suggests that the oversupply problems and things that will eventually hit this company aren't anywhere near to NVIDIA right now.
Corey, my friend, we could not have done it today without you. Thank you for sticking around. Appreciate it.
Always good times, guys. Thank you.
NVIDIA's fourth quarter sales rising 12% from the previous quarter. Looking ahead, the chip giant is expecting a ramp of Blackwell in the first quarter, while CEO Jensen Wong touts NVIDIA's new generation of AI chips. Here with more is CFRA Research Senior Equity Analyst Angelo Zeno. Angelo, it is good to see you. So listen, you saw the print. You've been listening to the call. Angelo, give us your high-level takeaways. What'd you make of this report?
I thought it was a good report. I thought it was a good call overall. I think Jensen addressed as much as he possibly could in terms of some of the issues that are out there. Clearly isn't going to be able to kind of give all the answers and kind of alleviate all the concerns that are out there in the market. But as far as the results are concerned, I mean, listen, better than expected October quarter results. January quarter results in terms of the April guide. Also on the top line was better than expected. I think really the key was the Blackwell revenue out there at 11 billion out there, and the fact that, you know, the guidance out there implies that, hey, listen, you know, we've kind of resolved a lot of the supply constraints out there, and we are successfully ramping here. I think that really is the key out there. And then as far as the margin issues are concerned, that's the big one out there. You know, again, on the call, they kind of reiterated their stance on the fact that, hey, listen, we're going to bounce back here likely after, you know, this weak April quarter gross margin guide back to the mid-70s, hopefully at some point in the second half of the year.
Yeah, and just to let viewers know what you're referring to there in particular, the company saw its gross margin at 73.5% in the fourth quarter, which was matching what analysts have been anticipating. In the first quarter, adjusted gross margin going to be at most 71.5%. It said 72% is what analysts on average were looking for. But the company has talked about that it's going to get back up into the mid-70s. Colette Kress saying that at some point this year. She was asked about that on the call to sort of drill down into that a little bit more. And she talked about perhaps improving costs, right? Cutting out costs as they get more adept, I guess, with the supply chain. Are you reassured by that? Do you think they can get back up to that mid-70% range?
No, we do. And, you know, it's not very uncommon when you kind of start new product cycles like this. And listen, Blackwell is still in its early days, right? I mean, when you think about it, I mean, we did see kind of that 3-month delay early on. And, you know, we are kind of, at least we started slowly ramping here in the January quarter. And again, it's going to be a more pronounced ramp as we kind of go here in the April quarter and the July quarters out there. They've got a huge pipeline out there. We have no kind of concern as far as, or didn't have any concerns as far as the visibility was concerned. It was more about the execution side of things. And of course, the costs typically are higher early on in these kind of cycle ramps. And as you kind of start ramping, that revenue, those costs start to subside, and I think that's clearly what you're seeing here, and they're going to be able to kind of improve some of the efficiencies across the supply chain here over the next couple of months.
Angelo, sometimes you'll hear talk whether NVIDIA is too reliant on this handful of hyperscalers, those big cloud giants. And Jensen Wong said on the call, it was interesting, he said over time, he says, it's the enterprise market will expand to be far larger than that hyperscale market. You believe that, Angelo?
I think that's the hope, right? I mean, we're kind of migrating towards, this world of AI agents out there. And eventually, it's going to be all about the physical AI world, and that's really something that Jensen Wong believes in. And as you kind of think about that physical AI world, it's gonna require the enterprise space to really kind of more aggressively invest out there, on the inference side of things. And, we're believers of that. I think, the question is, how long does this take? Right now here, that about half their revenue right now is tied to these hyperscalers. We don't think that changes much here over the next couple of quarters. It will continue to be largely driven by these hyperscalers out there. But we do think over time, the fastest growth area within their kind of ecosystem is going to be, on the enterprise side of things. The question is, again, it's probably 2 to 3 years or even, more than that down the road. It's not something you're likely going to see at least over the next 4 to 6 quarters in our view.
Is there any vulnerability in being so exposed to the hyperscalers, Angelo?
I mean, there's always vulnerability to it, but I will say this. I mean, when you kind of think about these data center cycles and you kind of think about who these customers are, I mean, they are literally investing, in compute, utilizing all free cash flow out there, right? It's not like they're borrowing or doing what what a lot of these telcos did back 25 years ago in terms of what they had to do with Cisco out there. So it's a much different world out there. And, given the free cash flow trajectory of these companies, the need for a significant amount of compute here over the next kind of 5 to 10 years, and you kind of think about just the overall cloud environment and the growth of cloud here looking ahead, we feel very confident, or much more confident, with them being kind of tied to those hyperscalers out there than we would any other kind of customer category out there. So from that perspective, I think you should be okay with that. But there's always concerns of kind of overbuild and what have you. I don't think you're at that point in the cycle yet, and you never know kind of how long these kind of data center cycles really last. I mean, it could last 5, 6 years for anyone knows. So it'll be interesting to kind of see how this cycle plays out to other cycles.
Yes, it will, Angelo. Thank you so much for your perspective. Appreciate it.
All right, thanks for having me.
Stick around. We got more of Yahoo Finance's special coverage of NVIDIA's earnings coming right up. We're still digesting NVIDIA's earnings report, and who better to round things up than to bring back Yahoo Finance tech editor Dan Howley, listening on the call for us. What were the highlights for you? What really stood out for you?
Yeah, I think some of the kind of ways that Jensen Wong and Colette Kress attempted to address some of Wall Street's concerns, investors' concerns, around a litany of topics, whether that was China saying that, look, China revenue is below where it was prior to the export controls. It's going to stay there more or less at the levels that they're seeing, whether that was ASICs, those chips that are specific for certain tasks. Jensen Wong basically saying, look, they're not going to be as good as what we have to offer. Those are application specific, and our chips are general. They address everything. There's also the idea of perhaps running out of runway when it comes to the cloud service providers. But to that, Jensen had said, look, there's still commercial space. We have a clip for that.
We've really only tapped consumer AI and search and some amount of consumer generative AI, advertising, recommenders, kind of the early days of software. The next wave's coming. Agentic AI for enterprise, physical AI for robotics, and sovereign AI as different regions build out their AI for their own ecosystems.
So just kind of, Jensen's way of going over the different ways that NVIDIA is able to kind of spread out beyond just the cloud service providers that, again, provide the 50% of data center revenue for them right now. He's saying that there's other opportunities available that are going to spring up over time. And, we talked about Blackwell Ultra earlier, but they also touched on Vera Rubin, which is going to be the next chip that they announce. And hopefully we'll hear more about that at GTC next month.
Dan, you think Jensen Wong and Colette Kress, did they do enough, do you think, on this call to address any DeepSeek jitters that are out there?
Oh, yeah. I mean, they touched on that, basically from the jump. Even before they got on the call, they did it in the actual earnings release, saying, the kind of longer amount of time a model needs to think, the more processing power it needs. And so that's a reason why cloud service providers or other companies would want to invest in NVIDIA's heavy duty chips, the Blackwells. And so not necessarily those H20s that DeepSeek had managed to use to develop that R1 model, but these larger kind of heavy duty ones that Meta's buying up, Tesla's buying up, Microsoft's buying up, and how those will enhance models like DeepSeek's R1 or V3. So I think they really did manage to hit on that pretty much throughout from the time that they actually released the numbers to the end of the call. It seemed as though they really wanted to touch on those a good deal.
Dan, thanks so much. Not sure how much they convinced the shareholders. The stock is still kind of bouncing around the flat line here. Dan Howley, thank you so much. Appreciate it. Well, the futures market opening just a few moments ago right now pointing to a mixed open tomorrow, but a lot could change between now and tomorrow morning, of course, including with NVIDIA shares themselves, let alone with the futures. For right now, we got the Nasdaq futures trading higher. We'll see how much NVIDIA ends up helping with all that. That's a wrap on Yahoo Finance's special coverage of NVIDIA's fourth quarter earnings report. Be sure to tune into more coverage tomorrow morning as our opening bid podcast is coming at you live with special coverage of NVIDIA's earnings. Join us tomorrow at 8:30 a.m. Eastern for that. In the meantime, have a great evening.